You mentioned, I mean, in providing these ETFs, it provides what institutional class leverage to retail players. It'd be easy to really build like a fear-mongering case around that. A lot of pearl clutching over whether retail investors should have access to that sort of leverage, because of course for NVDL, which is up 300% year to date, you also have the inverse of that. Of course, you have the Granite Shares 2 times short NVIDIA daily ETF, which is down about 88% on a year-to-date basis.
Yeah, so I mean, I think you mentioned it in the opening, which is NVDL is up 1,500%, right? And we don't charge 2 and 20. So it's incredibly inexpensive way to generate outsized performance. But with leverage comes risk. And of course, these products are not without risk, just like any leveraged instrument. And I think the important part is that, for sort of retail, it's not necessarily inexperienced retail, because there's a suitability requirement at almost all brokerages to buy leveraged products. So it's not like you can just open an account and start trading these. So these are typically permissioned for active investors or active traders only. And so you get investors who are comfortable taking leverage, a lot of the same people that use perhaps options or certainly invest or trade in the cryptocurrency markets. So a lot of those types of profiles up to, like I said, the most sophisticated hedge funds and trading firms in the world.
So yesterday you turned some heads. You filed for a whole new brand called Yield Boost. This seems to be a competition to YieldMax, which is a different firm that's had a huge hit. They write call options right out of the money. So you get a lot of premium, but you give up a lot of your upside. You're now going to do these on some leverage ETFs and some single stock with leverage. Obviously, what kind of yields are we looking at? And is there any kind of danger here?
Well, I mean, I think it builds off of the ecosystem comment that you just made, which is that once you start to get investor interest around a particular category, and in this case, it's alternative income, and we've already learned that by doing whether put write strategies or call writing strategies, you can generate a lot of income. Now, clearly, you're giving up some upside in the case of some of those strategies as well. But all things being equal, the more volatility you have, the more income you should be able to generate. So it's just an extension of that, really. And for those that are really looking for income plays, it's already proved that this is a popular category and this is the next level of it.
I actually want to talk about tickers because I believe we were having a conversation with Mike Venuto a couple weeks ago. If it wasn't Mike Venuto, I'm sorry, but he said there isn't necessarily a ticker shortage out there, but there could start to be for some of these single stock ETFs, since if you're basing it off a single stock, there's only so many ideas that you can use there. So you filed for 25 in a single day. You haven't listed tickers yet. Do you think that there could be a ticker shortage when it comes to especially these single stock products?
I think already there has been for some years. I mean, if you look at even Eric mentioned at the beginning about our gold ETF bar. So what most people don't know is that's a really cool ticker, but that was actually a ticker that was used on a failed ETF beforehand. So that was already on an existing ETF. The ETF failed. We then took over the ticker because our timing was right, the ticker became available. But I would say for years that for great tickers, they're a massive premium.
So what's going to happen? I mean, is there going to be some sort of shadowy market for tickers? How does this evolve, basically?
I think it evolves in terms of adding different computations to the actual ticker profile. So we've gone from 3 characters to 4, maybe it goes to 5, or maybe you put in some numbers as well. I mean, that's obviously something for the exchanges to consider. But if you look at those, those really, really important tickers, I'd say it's already a premium.
Eric, can you imagine numbers in an ETF ticker?
Well, they do that. Well, in Asia, it's all numbers.
Yeah.
It's really you can hardly remember them. Yeah, there's some numbers in Europe too.
I can barely remember my cell phone number, so that would be a disaster for an ETF reporter, but we're going to have to leave it there. Really appreciate your time today. That, of course, is Will Rind of Granite Shares. Now coming up, fighting the Fed, why a slowdown in ETF trading leading up to the central bank's decisions signals that investors, they're getting tired of predicting when rates will be cut. This is Bloomberg.
The names that move markets are on Bloomberg.
You know, with all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. You know, look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time we have to constantly resurrect this spirit of resilience.
But are you hopeful that...
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. It's time now for the ETF Brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with the flippening, at least when it comes to Bitcoin ETFs, because BlackRock's IBIT, now the largest Bitcoin ETF in the world, it overtook GBTC yesterday in the most recent data that we have. Really interesting, as you can see on that chart there. It's been a really dramatic narrowing over the past few months. Of course, IBIT has only been around since January, but that's what the BlackRock brand name and, of course, its distribution will do there. Let's also talk about bonds. From Bitcoin to bonds, we're going to talk about TLT here, because a big inflow into TLT yesterday, about $1 billion coming in a single day. That is the biggest one-day inflow since last December, I believe. And it's interesting that even with that big inflow that we got, $1 billion for the year net, it's looking at an outflow of about $100 million. So clearly, appetite has soured for long-duration bonds this year. And let's keep the conversation going on bonds, because, Eric, there was a really interesting piece out from Athanasio Serifagis, who rumors say that he's in this studio right now. We're going to get to him. But before we do, let's highlight this chart. It's interesting. It really highlights how tired investors have gotten about the Fed, that leading up to the Fed, you don't see the most volume there anymore. Now it's the days after the Fed. Maybe shows that investors are tired of trying to predict where rates are actually going to go.
Yeah, absolutely. I mean, we have, don't fight the Fed. It's a famous phrase. The Fed typically wins. And you wrote a piece that is really great about this. TLT is the ultimate Fed fighting ETF. Explain.
Yeah, and so last year it was like the hottest trade, right? Like 22 billion or so came into that ETF. And I feel like the confidence level of people fighting the Fed has changed. Like the beginning of the year was, we're going to get rate cuts in March. Then it's June. Now it's like no rate cuts. Now there's like a rate hike potentially coming. So when you look at how sentiment has shifted around TLT, I feel like people are more confident heading into the Fed days. They were trading that quite a bit. All bond ETFs were trading, but especially TLT. Then you sort of saw it shifted towards on the Fed days. Now they're kind of waiting for all the information to come in before they're trading. So I think it just speaks to they're less confident about what the Fed is going to do. I think they're less hinging on like some of the words of the Fed chair and whatnot. But I just think that people have just gotten fatigued of fighting that trade.
Feels like everyone's tired. Investors, consumers, anchors, etc. But let's talk a little bit about where they are sending money, because maybe it's not going to the long end. I mean, outside of what we saw yesterday in TLT flows, but the short end is still pretty popular here.
For sure. And I think it was on this show, Rick Reeder had said, clip coupon and just like wait. And I love that quote. And I think that's what everyone's doing. You're still getting 5% or so in bill. It's been a pretty good trade. Why start fighting the Fed and figuring out what they're going to do? You have it pretty nice in like bill and the short duration stuff. And that's where most of the money is going in bonds.
Yeah, and I think that's the difference between a money market mutual fund or SHI, which is the short end, is that that's just for income. You're not going to TLT for income because you get the same amount with taking no duration. This is a bet. And people sometimes talk about TLT being like a retail trade, mom and pop, but almost 80% of it is accounted in the 13Fs, meaning it's mostly pros. Would you say this is a lot of pros making this bet who are seduced by this trade?
Oh yeah, for sure. I don't think retail is like really looking at TLT. I think also just the magnitude of the flows that goes into it, I think speaks that it's very institutional too.
I do want to switch gears, actually. I want to go back to tickers. I thought that was so interesting, that conversation we just had with Will Ryan, because it was also a piece of your research highlighting that we could see a ticker shortage. It seems like, according to Will Ryan, it's underway, at least when you look at the single stock products. What about the world at large when you take a look at broad brushstrokes, the ETF industry?
I think, yeah, I get it. There's 26 letters, and so there's a lot of combinations, but you want it related to your ETF, right? So I think in that aspect, there is going to be a shortage. But then I think something you had mentioned, it'd be interesting to see closed ETFs if they come back, or if there's offers for tickers that that issuers might be sitting on. I think that's definitely. It sounds a little ridiculous, but I think it's going to be a real thing. That there's going to be fights over tickers.
Maybe there will be sort of like a back alley shadow market for ETF tickers. That would be a lot of fun to cover. So I don't know if I'm rooting for that, but in any case, Athanasio Sarafagis of Bloomberg Intelligence, thank you so much. Still ahead, we're going to drill down into dividends with Dina Ting of Franklin Templeton. That conversation coming up next. This is ETF IQ on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
This is Bloomberg ETF IQ. I'm Katie Greifeld along with Eric Balchunas, and it's time for today's drill down where we focus on one ETF. Eric, take it away.
Yeah, thanks, Katie. Today we are looking at Divi. DIVI is the ticker. It's a Franklin International Core Dividend Tilt Index. So the core means it's something you can use in your core. It looks at mid and large cap stocks that are not in North America, tries to balance high yield with the dividend, but also some capital appreciation. And the tilt is like, we are going to tilt a little bit. So even though it's passive, it is sort of like a smart beta ETF. And you can see there it's 820 million. That's pretty big for a dividend ETF because there's like so many. The competition's fierce here. And the fee is 9 basis points. That's dirt cheap for this kind of strategy. That's probably why it's successful so far. Let's look at the holdings. One of the reasons this is done well, in my opinion, is that Novo is the top weighting. Yet it's only 2.5%, which brings me to the other weightings. You can see how it's like equal weighting. That's going to give it a little more zip, and you're going to get a little more, say, small cap or small or large cap exposure here because of that. And then let's compare it to some other big international dividend ETFs out there. This is what really matters because there's so many of these, you have to outperform to stick out. And this one has. Over 5 years, Divi is up 63%, the Vanguard is up 43%, and then the Spider is down. That could flip. I'm not trying to disparage the little ones, but that 5-year performance there, Katie, is obviously a big part of this. Throw in the 9 basis point fee, and it's no surprise this thing's closing in on $1 billion.
Eric, thank you. And joining us now to talk about this ETF, I'm pleased to say we have Dina Ting. She is head of Global Index Portfolio Management over at Franklin Templeton. I want to talk a little bit about portfolio construction here because you point out in your notes that not all of your holdings in a dividend portfolio need to necessarily pay very high dividends. How do you pick and choose which stocks actually go into this ETF?
Yes, I think that's what's unique about this income strategy. Typically, when someone crafted or constructed a portfolio with a tilt into income, all they care about is a dividend yield. In this case, we want to balance the income and the capital appreciation, which means that we believe that the sum of its part is better than the individual. And what that means is we're able to put in companies that has a higher capital appreciation, even though they're not paying a high dividend, and combine that with the company who may have a lower expectation of return with the one that is paying a higher dividend. So the combination of its part is the one that makes this one very effective. At the end of the day, this is maximizing yield per unit of active risk, right? Because we don't want to deviate too much from the benchmark that is benchmark against, whether that's a developed market, but also give you that extra tilt without sacrificing total performance.
And Dina, as I went over, this performance has been really good. So that obviously is going to help your case. But international ETFs, if you're in the U.S., haven't been that attractive to investors. Even though many countries are hitting all-time highs, it's just not as good as the U.S. If it's been tough to get people to bite on the international part of this trade.
Correct, Eric. I mean, the story about international with the U.S. being so strong the past few years. But I think it's probably now the time with international, and you can see it when you look at performances of last year, right? People tend to lump international as one. But if you look at single country, some country really perform strongly. For example, last year, Mexico was performing strongly. And then this year, year to date, Japan, especially the Japan hedge, has been performing strongly. Part of the reason why Divi has been having the performances that you highlighted is because on top of the Novo Nordisk that you highlighted, it also has a few of the names that is helping in the artificial intelligence powering the longer term team. If you look at all the earnings call, you're hearing people are spending more and people trying to build the semiconductor chip manufacturing that's powering artificial intelligence behind that. But if you look at some of the individual name within Divi, ASM Lithography, and then the Disco Advantest, they are companies that power that semiconductor ecosystem. Even though they are not particularly manufacturing the chip itself, they are the equipment that help build those manufacturing firms. So they are kind of like the beneficiary. Just if you look at the analogy, the automotive, the auto parts, semiconductor, this is the semiconductor equipment and tests that helps.
And I want to go back to sort of when you talk about where you add new holdings to this fund, because, I mean, we're just through the real heart of U.S. earnings season, and you saw a lot of companies come out and boost their dividends. How often do you rebalance? Do you add things? Do you take money, or not money, actual shares out of this ETF?
We do that on a quarterly basis. So on a quarterly basis, we're doing the rebalances to first look at companies that are adding dividend, as you said, but also balance that throughout. Because what's probably unique about this dividend strategy is the fact that we took a very conscious effort on the active risk, right? So which means we have constraint on the on the sector, on the country, as well as on the turnover itself to make sure that it's delivering what we try in terms of the objective, maximizing yield per unit of active risk.
And if we look at the actual yield, the only thing that sticks out is this is only 10 basis points more yield than EFA, which would be sort of the bigger benchmark. That's 2.94%. Yours is 2.8%. Is that a challenge? Do you, to entice investors, do you need a little more juice than that?
I think our strategy when we come in with the ETF at Franklin Templeton is we want to kind of disrupt the industry, whether through a cost or through a performance or through a combination of both. So in this case, we offer investors, you get that tilt of income, but you don't have to pay that much extra for that. And I think that's the reason why we see the success of this strategy. This is one of those dream ETF where you actually see like organic growth. For like the past year and a half or so, we see creation almost on a daily basis. It's small, but it's growing, which just shows that it's truly organic. It's not just a handful of big investors, but there's a lot of people who like this strategy and showing that by the activity of their flows.
All right, Dina, really appreciate your time. That is Dina Ting of Franklin Templeton. And if you just can't get enough of ETFs, reminder to tune into the new Tiger Money podcast that'll guide you through Asian financial markets. A reminder that we're back on Monday next week. That does it for Bloomberg ETF IQ. This is Bloomberg.
In global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable. Not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg.
Welcome to Bloomberg Markets. I'm Katie Greifel. Let's get a check on markets right now. Midday in the session, you can see we're looking at a down day on the S&P 500, off by about 0.6%. You keep going down the list there, and you can see that the NASDAQ 100 is also off about 0.4%. Your big underperformer on the day, you don't see this too often, but you have the Philadelphia Semiconductor Index, your chip maker stocks, off by about 1.6%. And all the while, you are seeing a little bit of a lift when it comes to bond yields. The 2-year Treasury yield currently higher by about 1 basis point. Meanwhile, on the midday movers, when it comes to the equity side, ConocoPhillips agrees to acquire Marathon Oil in an all-stock deal, valuing the company at about $17 billion. This deal, of course, it adds to a wave of recent energy M&A as producers seek new drilling sites on a bet that oil and gas demand will remain strong. Meanwhile, American Airlines revising its profit outlook downward, adding to uncertainty in the aviation industry, already grappling with geopolitical tensions and rising travel costs. The airline also disclosed that its chief commercial officer is departing. And China's leading ride-hailing provider Didi Global reported a net loss for the quarter. That's despite a 15% rise in sales. The company is also losing money on its stake in an electric car maker. And meanwhile, here in the U.S., electric vehicle inventory is being isolated to just a few states. Bloomberg's Abigail Doolittle is standing by with the details.
Well, Katie, before we take a look at geography and electric vehicles, let's just take a look at some of the broader trends, because we have seen some slowing growth. Specifically for 2024, growth is expected to slow to 20% this year, and that's down from 40%. So that is a pretty significant drop. Now, some of it does have to do with that concentration by geography or by state, as you were just talking about. We'll be taking a look at that in a minute. But not surprisingly, because some of these trends, maybe saturation of those who want electric vehicles at this point, or maybe fears around the infrastructure and that it's a little bit limited in certain areas, or maybe even all areas, some of the automakers have cut back, such as Ford in January, making the announcement that they were going to be pairing their F-150 Lightning based on lighter EV demand. So if we put this together for some of the stocks, including, of course, Tesla, the dominant EV maker, along with Ford and General Motors really doing the best over the last year, up 27%, whereas Ford and Tesla over the last year both down about 10%. As for that geography, let's take a look at this map. This is really a very neat picture here. So the brighter the green, these are where we have more EVs in the dealerships. However, in a state like Wyoming, 62 EVs in dealerships. In North Dakota, 138. In Maine, 296. So one thought is, if some of the concentration in terms of EV or drive the adoption into some of the other states, well, maybe that will be a new pool of demand for electric vehicles.
All right, Abigail Doolittle, thank you so much. And for more on the auto outlook and the EV outlook, I'm pleased to say we're joined now by Hyundai North American CEO and Global COO, Jose Munoz, as well as Bloomberg's own Matt Miller, our resident car guy. Let's kick off this conversation with what's going on at your Georgia plant. Bloomberg reported in April that Hyundai is going to spend more at that plant to produce more hybrid vehicles. Are you still betting that it's going to be the full battery EVs that are going to dominate?
Well, good afternoon. Thank you for having me. It's good to see you, Matt. Well, we are still very confident, and I was visiting our plant in Savannah last week, and I'm happy to report that we'll be able to produce 3 months ahead of a schedule. So by October this year, we will start producing our very popular Ioniq 5. So I think that's great. We're very confident. And then, as I've said many times, we continue to double down on our bet for electrification, and we're happy to continue with that. To your question about the hybrid, we've also seen that the evolution of EV sales in the industry may be not as fast as everybody expected or as the regulation would expect. And then we have seen also that a number of consumers are betting for maybe alternative fuel types beyond ICE, like hybrids and plug-in hybrids. And that's why we have decided that in our plant in Savannah, we're going to produce also hybrid vehicles. This is going to imply, of course, an increase on investment, but we believe is needed. And we are very happy to see the reaction of our dealers and our stakeholders as we have announced that.
Is the Ioniq 5, by the way, great to see you as well, Jose. The Ioniq 5N hit the market, wowing a lot of people with the sort of ICE emulation and sporty performance. Is that thing sold out already? I mean, what are the orders looking like for that?
Well, Ioniq 5N is unbelievable. I think the few journalists like you, Matt, know really what this car can do. It's more than 640 horsepower. It just made it to the Performance Car of the Year in the World Car event that took place in New York in April. And this is only after 2 years earlier, the Ioniq 5 became World Car of the Year, EV Car of the Year, and Design EV Car of the Year. I think this is one of the few cars that could race you in one of your motorcycles and beat you. But then I'll leave it to an opportunity in the future.
I look forward to it, Jose. Listen, the price tag continues to get higher as these cars gain popularity with consumers. Obviously, the Ioniq has done well. This one costs, I think, north of $65,000. And the Genesis product is doing so well that you're able to take more price there. Do you see that power increasing even as it's falling for your competitors?
Well, we really do see the power increasing. So we really believe that the future is going to be electric. So it's not a matter of if, but when. If you go to Europe, I think there is about a 20% mix of EVs. You go to other regions like China, it's about 30%. We are stable in the United States, about 8%. But in our case, we continue to do very well. This year to date, we have increased our sales of EVs by more than 50%. And last year, we doubled our sales of EVs. So if anything, those vehicles are helping our company to position themselves in a better place. So in fact, in the United States as a group, we are number 3 on retail sales. But on EV sales, we're number 2, only behind Tesla. So we are confident. But to your point about affordability, what we have seen is that if you compare the prices to 2 years ago, the prices have gone down about $15,000 in average. But some OEMs, including us, or in our case, taking the lead, we're bringing new high-performance versions that the consumers like. I think we're working also on trying to bring the prices down so that it is not only a matter of performance, but also affordability and convenience, plus charging infrastructure, etc. But that's where we are. That's what we want to do.
And Jose, I want to talk a little bit more about your Genesis brand. In full disclosure, I actually drive a Genesis, but even outside of myself, I'm seeing more and more of them on the road, on the highways. And I'm curious, who are you positioned to be taking share from? Are you going up against Mercedes, BMWs, for example?
Well, first and foremost, I agree with you. So I think we've done quite well. And in the last 9 years that we've been in the market, we've more than increased our volume 8x, right? And we continue to grow. We are outpacing the market. I think the market on luxury is about flat. We're growing more than 3%, driven by our SUVs mainly. So the GV80, the GV70 that we produce in the United States, including an EV, they are the ones that are doing the best job for us. But also, the sedans that we bring to the market. So we're very pleased. And in fact, we have started now to have exclusive dealers to about 35 so far. And we want to take this number to about 100, hopefully in about 1 year or so. And as we the number of exclusive dealers, and we continue to bring new products, like right now we're about to launch the GV80 Coupe, we see the sales growing strongly, the dealers making good profits step by step, and we're creating the brand. So our main competitors are luxury competitors. And then in the EV field, of course, you have Tesla. But in the other technologies, the German 3, so Mercedes, BMW, and Audi are our reference. So we are still behind, but we're working hard. And then the way we made it today, I think, has been faster than most of our competitors before.
I talked to some Bloomberg intelligence analysts who say part of the key to your success is your strong relationship with a dealer network. I have a lot of dealer friends who are angry at domestic automakers when they talk about ADMs and talk about selling directly to consumers, but dealers are all happy to sell Hyundais, Kias, Genesis. How do you keep that relationship strong even in the bad times?
Well, that's really a key success factor. You said it better. So we praise our dealers, and particularly the members of the dealer advisory board on both Genesis and Hyundai, because they've been with the brand for many years now, and they've seen the evolution of the brand. And at this moment, they're very supportive of the strategy that our executive chair, Mr. Chang, established for the global operations. And then one of the things that we do is that we meet on a regular basis in person. And then we genuinely listen with good intention. And I can tell you that because the results have been better, because we were able to implement the strategies that the dealers gave us good ideas about, etc., the dealers are happier than ever before. They're making more money and they are investing. So ultimately, the chairman of the Genesis Retailer Advisory Board, Kevin Riley from DC, he told me recently, it's not a matter of the different surveys or what they can tell you. When you see the dealers are putting their money in your brand, investing in facilities which are exclusive, this is when you know you're doing something right. And then I could say the same thing with Andy Wright, who is the chairman of the advisory board for Hyundai, which is also one of our best performing dealers, investing, etc., etc. We continue to have a dialogue, listening to them and trying to work together as a team.
All right, Jose, unfortunately, we have to leave it there. Hope to speak to you again soon. Our thanks, of course, to Hyundai North America's CEO and Global COO, Jose Muniz, and, of course, our own Bloomberg's car guy, Matt Miller. Now coming up, Kava CEO Brett Schulman. He joins to discuss the fast casual chain's new offerings and its sales outlook. That conversation up next. This is Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about. They fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you...
I had actually run tech banking and took Google Public, so I had a little sneak preview.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Reporting from our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
So the Fed bids for 7-year notes totaling $2.6 billion.
This is Bloomberg Markets. I'm Katie Greifeld. It's time now for the stock of the hour, and shares of Kava making a U-turn in the session. Stock is now higher. It was lower this morning, of course, after it reported results where it boosted its annual sales outlook, but it did see a decline in customer traffic. For more, I'm pleased to say we're joined now by Kava Group CEO Brett Schulman, as well as Bloomberg's own Romain Bostic. So, Brett, coming to you first, obviously, let's talk about that decline in traffic, foot traffic, because I see a 1.2% decrease when it comes to the first quarter. What do you chalk that up to? And again, we're really nitpicking here because overall it was a beat and raise quarter.
Yeah, well, thanks for having me. And think about it in terms of a 2-year stack of same restaurant sales. We were cycling through a pretty exceptional same restaurant sales from Q1 of 2023 of 28%. So on a 2-year basis, our same restaurant sales growth was actually 30.7%. And then when you think about it on a quarter to quarter basis, our traffic accelerated from 13% in Q4 of 2023 to 17% in Q1 of 2024. And we've seen strengthening trends over the course of the year, which gave us the confidence to raise our full year outlook on our same restaurant sales guidance to 4.5% to 6.5%. So excited about the momentum we've seen in the business.
Are you seeing sort of any sort of uptake, Brett, in terms of new customers coming into Kava? The types of customers that might have gone either to your competitors or to some of the pure play fast food restaurants like McDonald's?
Yeah, Romain, we're seeing increased awareness across the country as we've been able to expand and people become even more aware of the benefits of eating Mediterranean cuisine. And we've seen that in greater frequency of existing guests and also attracting new guests, both from casual dining trading down and traditional fast food trading up. So when you think about some of the effects coming out the other side of the pandemic and this high inflationary period we've all lived through, consumers are really gravitating to our value proposition, where the traditional full service dining model has been struggling to deliver that value proposition to a modern consumer. And then as prices have increased at a faster pace in traditional fast food, it's improved the relative value proposition of our healthful Mediterranean cuisine. I saw a survey the other day commissioned by LendingTree where 78% of respondents agreed with the idea that fast food has become a luxury and has become too expensive. And so people are looking and saying, for $1 or $2 more, I can have this fresh bowl of Mediterranean cuisine at Kava.
Well, we've definitely seen that price gap narrow big time as the prices at some of those fast food places have gone up. Your prices have gone up as well. I am curious if you intend to raise prices any further this year in 2024.
Well, we took just less than 3% in January. We have no plans to take any further price increases. And when you look historically, since the end of 2019, we have taken much less price than CPI. So CPI has grown about 18% to the end of last year, and we've only increased prices about 12%. So I think, we're always trying to reinvest in our guests, reinvest in our team members to create that long-term shareholder value and try and mitigate the inflationary pressures our guests are feeling. And we did that in California. So AB 1228, the legislation that increased minimum wage pretty significantly, many of our peers took price increases to offset some of that wage inflation. We did not pass along any expense to our guests. We leaned into those wages of our team members.
But how do you make up for that then, Brett? I mean, at some point, if you don't compensate for that, that's going to hit your bottom line, right?
Well, we've been great at our operations, continue to leverage that robust infrastructure that we've invested in over the course of our history. Our new manufacturing facility that we opened in Verona, Virginia, back in Q1, that we make all of our fresh dips and spreads. So think that tzatziki, that crazy feta, using fresh dill, fresh cucumber, that allows us to do it not only from a quality and consistency standpoint at scale, but very cost effectively, taking that complexity out of the four walls of our restaurant and able to pass that savings along to our guests.
Brett, let's talk about expansion plans here. specifically when it comes to the time of day, because I would think I'm safe to say that most people think of Cava as a lunch spot, but what opportunity do you see in expanding to dinner, and how do you get there?
Yeah, so actually, we have 46% of our revenue coming from our dinner occasion, and that's continued to grow over time. We're not just a place you can get lunch, we're a place you can get dinner. As I mentioned, seeing that trade down from casual dining, and we want to continue to lean into that. So there are a couple things we're doing this year to take advantage of that opportunity. One is called Project Soul. So it is a warming of our interiors. Think adding bolsters to our booths, plants, really livening it up so that our dinner guests who are already coming in feel that desire to come in even more frequently and have that great dinner occasion and connect in person. And then from a culinary standpoint, our culinary team, including my co-founders, have been working on our first new main that we're going to launch in a while here called steak, grilled steak. Next week, we launch on June 3rd. So another hearty main item that can really address that dinner occasion and that guest need at that dinner day part.
All right, steak coming to Cava next week. You heard it here. Cava Group CEO Brett
ask him about the pita chips.
We didn't ask about the pita.
Okay.
We'll have to do it next quarter. Brett, really appreciate your time today. Our thanks, of course, to Cava CEO.
So in 10 minutes' time now, at the top of the hour, headline event for the day is the US selling $44 billion in 7-year notes. So the prior bid to cover was 2.48. The prior high yield was 4.716%. So just noting the benchmark 7-year yields have extended above their 50-day moving average over the recent sessions. They're currently sitting at the cheapest level since May the 2nd, which could appear attractive at auction. So against the curve, the 7/30 spread has widened around 1.8 basis points on the day, although remains near the bottom of the 1.5 basis point to 31.4 basis point yearly range, again at around 11 basis points. Against its peers on the curve as well, the 3/7/10s flies cheaper by around 2 basis points on the day. It has widened from as low as negative 23.3 basis points that was seen on May 23rd to the current negative 15.5 basis points, which again may appear more attractive on a relative value perspective. So JP Morgan strategists see the auction as requiring an additional concession from yesterday's closing level, citing the auction sector appearing somewhat rich along the curve. Also noting the latest CFTC positioning data, which shows that speculators were net short 401,000 10-year note futures, a potential source of covering demand at the auction.
I get asked more about our relationship than I do my wife. And, you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal?
The Deal?
The Deal. The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg Markets. I'm Katie Greifeld, and it's time now for Wall Street Beat. And today, we're looking at how Goldman is building up a $21 billion war chest for private credit wagers. And joining us now with the scoop is Bloomberg's Sridhar Natarajan. So, seems like Goldman maybe got tired of all these private credit firms eating their lunch.
Well, there is a slight distinction between Goldman and the other banks. Unlike its most major competitors, Goldman already is a bit of a veteran in the niche of private credit. It has over $100 billion in assets. It wants to grow to $300 billion. But remember, the goal at Goldman Sachs right now is to really turbocharge its asset and wealth management division, its money management business. And the best calling card when you're seeking an expansion in that space right now seems to be private credit, which undoubtedly is the buzziest and busiest asset class on Wall Street.
Well, it feels like we can't go into any conversation without talking about private credit somehow. Actually, we heard from JP Morgan Chase Chief Executive Officer Jamie Dimon saying on Wednesday that there's going to be hell to pay if private credit sours. What exactly did he mean by that?
Don't you love it? Wednesday morning, Goldman Sachs says it has raised its largest pool yet for private credit bets. A few hours later, JP Morgan, one of their top rivals, comes out and says, Jamie Dimon, no less, comes out and says there will be hell to pay. What he's really talking about is this deluge into the asset class. Yes, there are veteran players there, but you're getting into a credit asset class where credit selection is important. You are dealing with individual companies. You're not part of a broadly syndicated group where you have small tickets and a number of loans where even one or two defaults are not going to hurt you that much. When it's a single company, when you have most of that loan, a bad situation, an adverse economic reaction, an adverse market reaction to that company could cause you great pain. Yes, the veterans you can trust are able to find good deals. When there is some problem, figure out restructuring, figure out how to get out of that sticky situation. But for some of the newer entrants, we're not really sure if they're well equipped to tackle that. So when the credit cycle turns and a lot more players are in this private credit space, which has existed for a few decades but has really, really grown in the last few years, that could be cause for alarm, and that is what Dimon is talking about here.
And I only have about 1 minute left with you, but you touch on something that I've been wondering when it comes
Just
to
less than
private
5 minutes
credit
now until the top of the hour, where the US is due to sell $44 billion in 7-year notes. So the private to cover was 2.48. The prior high yield was 4.716%.
And I'd go back to something Mark Rowan said in Apollo's earnings call. He talked about this idea that you think about 50% in the public equities market, 30% in fixed income, 20% in alternatives. All the growth that you've seen in the alternative space, he said, has been from that 20% bucket. What it looks like, with fewer and fewer public companies out there and that alternatives bucket growing, there definitely is a sense out there that that asset class will continue to grow. So yes, there will be more investors jumping into the space, but we're jumping into what feels like a growing market. So the sentiment, at least right now, is there are opportunities there. There is money to be made.
The sentiment is still there. Bloomberg Sridhar Natarajan, always great to speak with you. That does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
The jury now has the case. Welcome to the fastest show in politics, with deliberations now underway in Donald Trump's criminal hush money trial in New York. We have arrived. As we wait for a verdict, I'm Joe Matthew alongside Kaylee Lines, who's back with us today in Washington on the fastest show in politics. It's great to see you. Welcome back. A verdict could come at any time.
Treasury, when issued, 7-year yield 4.637% before the $44 billion auction.
11:30 this morning, after extensive instructions from the judge were read to the 12 members of the jury, who ultimately will be deciding Donald Trump's fate here, whether or not he is guilty or innocent of any number of the 34 felony charges that he's been charged with, which of course are falsifying business.
So shortly expecting the results of the US 7-year note auction, I will lead with the bid to cover ratio.
Smart legal minds explain why they think that, Kaylee, but we're trying not to project or anticipate whatever's going to happen. The way this takes place will happen live. It'll be unfiltered, and we'll bring it to you as soon as we learn it here on Bloomberg.
Yeah, in the meantime, though, it is just a waiting game. None of us know what is happening inside that room, but certainly Charlie Pellet knows what's happening in trading today, so let's get a check on that with him up in New York. Hey, Charlie.
Well, hello there, Kaylee Lines. A lot of red on the screen, a lot of moving parts to this market. Bottom line, though, stocks lower across the board. Right to the numbers here, with the S&P down 25, below 5,300 at 52.80. A drop right now of 0.5%. The Dow down 347, down just about 0.9%, while the NASDAQ Composite Index down 35, a decline now of 0.2%. U.S. stock market under pressure. We've got the 10-year yielding 4.62% and the 2-year at 4.98%. Gold down $19 the ounce, now down 0.8%. West Texas Intermediate crude down
2.43, 2.43. High yield 4.65%. 4.65%. So the US sells $44 billion in 7-year notes and awards 65.55% of bids at high. Primary dealers take 17%, direct 16.13%, and indirect 66.88%.
Now by 5%. Another big deal that is underway, ConocoPhillips agreeing to acquire Marathon Oil in an all-stock deal, valuing the company at about $17 billion. Shares of Conoco down 3.9%, Marathon up 7.8%. After the bell today, we'll hear from Salesforce. Right now, S&P down 30, drop there of just about 0.6.
Seeing some downside in the S&P, a little bit of upside in dollar.
Now back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet up in New York, thank you so much. And New York, of course, is where the scene of the political universe, or the center of the political universe, is really spinning right now, Joe, as Donald Trump is now awaiting his fate to find out whether or not he will be a convicted felon when these jury deliberations are over.
Pretty remarkable. We did hear from him earlier in court. No lawmakers that I'm aware of, no Hollywood actors for that matter. We had Robert De Niro in front of the courthouse yesterday, which was a strange turn. The Biden campaign working that out with him. But we did hear from Donald Trump earlier talking about the rigged trial. Here's what he said in the lobby of the courthouse.
I would say, in listening to the charges from the judge, who's, as you know, very conflicted and corrupt, because of the confliction, very, very corrupt. Mother Teresa could not beat these charges. These charges are rigged. The whole thing is rigged.
Mother Teresa could not beat these charges. Let's get into it with Elizabeth Wydra. Glad to say she's back with us. Constitutional Accountability Center president and Supreme Court litigator. Elizabeth, it's great to have you. When you hear Donald Trump talk like that, Mother Teresa couldn't beat the rap. Was he convinced by the job the prosecution did in this trial?
Yes. Well, I think, when people hear Trump claim the trial is rigged and so forth, what I think is really important to remember is that the people who are deliberating right now, they are the ones who are going to decide, not the judge, whether or not former President Trump will be convicted of these felony counts or not. This is a jury of everyday Americans, everyday New Yorkers, who are going to listen very carefully to all the testimony, all the evidence, look at all the documents, think about the jury instructions that were given to them. And these everyday Americans are the ones who are going to be deciding Trump's fate. So when he says that it's rigged, it's really an attack on those Americans, which I think that, whether you support Donald Trump or not, most people have faith in our jury system. The founders of our country believed very deeply in the jury as a fundamental part of democracy. It's something we don't
US
maybe
Treasury
think about that
7-year
much
yields hit the
anymore.
highest since
People
May the
maybe they're trying to
1st
get out
after
of
the
jury
7-year
service
note
or whatever,
auction
but
last up
to the
9 spot
founders of the
3
United
basis
States,
points
it
at
was an
4.653%.
bulwark of liberty. Those were words that they used to ensure that we had a country that was ruled by law, that no one was above the law, including, in this case, a former president, and that no matter how powerful or how vulnerable you were, your fate would always be left in the hands of your peers. And here, that's what is going on right now as this jury deliberates.
Well, Elizabeth, also the entire notion that a defendant is innocent until proven guilty, and that there has to be guilt beyond a reasonable doubt for the jury to actually convict any defendant, Donald Trump or otherwise, of a crime. That was detailed in the 55 pages of jury instructions that Judge Merchan read out today. What did you make of the actual instructions themselves? It took almost an hour and a half for him to get through them, speaking to the idea that there are some complicated elements to the things that they are considering in that room.
For sure. And jury instructions in any case are always going to be incredibly important. And there's a lot of what the jury was instructed on today that is par for the course in any criminal case. So the judge is going to be talking to them about exactly what you just said, what reasonable doubt means, how much certainty. Obviously, we really don't know anything in life with a complete 100% sense of certainty. So what is beyond a reasonable doubt? The judge also will give a very standard instruction about, certain types of evidence, what certain aspects of the laws at issue of this case mean. And then there were the instructions that were more specific to this case about the credibility and corroborating evidence of witnesses and then documentary corroborative evidence that was heard in the court. So it's important that these instructions were very detailed, and they were. And, one thing that's unique about New York is that apparently the jurors do not get to take those instructions back with them to the jury room. So I think that might mean that we might get some more questions than usual from the jury as they're going about weighing this evidence against the law and following the instructions that they're given.
I want to ask you something. I want to be careful with this, Elizabeth, as we talk about the jury. There was reporting today in a couple of places, the Bulwark first to report a skeptical juror who may be Trump-friendly, has appeared to nod along in accordance with the defense, lit up when J.D. Vance walked in the room, smiled when Michael Cohen was in the throes of cross-examination. The New York Times has gone so far as to identify the number of that juror today. Is this dangerous? And what does it mean potentially for a deadlocked jury?
Well, I think that, we certainly need to be careful about not attacking the jury. And, Judge Merchan has been very adamant throughout this process and in the contempt order that was issued against Donald Trump for violating the gag order about attacking witnesses and the jury. So it's incredibly important that jurors be allowed to do their job without fear of intimidation. Certainly, look, the jury was selected by both the prosecution and defense. So one would assume that the defense got some jurors in the panel that they thought would be favorable to them. That's, part of this adversarial process that we have when we have a jury trial. So, the defense tries to pick jurors that they think will vote in favor of their client, and the prosecution looks for jurors who will weigh the evidence fairly, which they think will lead to a conviction. And so, I think that if the reporting about some of the jurors, there was someone who followed Trump on Truth Social. Probably a lot of people don't have Truth Social unless they are in some ways favorable to Donald Trump, but I suppose there are always outliers. But I think one thing that's important to remember is that the jury is a collaborative, deliberative body. And that's one of the things that makes it so unique. You need to have unanimity. And so part of that is the jurors coming together, reasoning things out together, working together to try to come to a result. There are instances of hung juries. That's where one juror is, or perhaps more than one, is a holdout. But often we do see unanimous verdicts because there is that kind of pressure to come to a group decision.
If, though, there is still that one holdout, Elizabeth, if we can just game this forward, knowing we have no idea what the outcome here is going to be, and there is a hung jury and therefore a mistrial, what recourse does the prosecution have? Does everything just end there? Could they get another attempt, another swing at this before the presidential election, knowing how hard it was to get this case to go to trial the first time around, let alone the many others that don't look like they will within the next 6 months?
Yeah, basically, I think that this would be the end of the road then if there is a hung jury. You know, it's an issue that I think the judge will be trying to get jurors to come to a unanimous decision, whether that's acquittal or conviction. You know, you always want a jury to come to a decision, and that's really what the process is aimed at doing, whether it's through the jury on their own or through the judge working with the jury to see if they can come to an agreement. And again, that's not pressure to come to a conviction. It's a pressure to come to a unanimous agreement because you want the jury to really render a verdict, whether it's a verdict of acquittal or a conviction.
Mm-hmm. Well, I'll tell you what, we're in the wait here at this point, Elizabeth, and we're trying not to speculate. I just wonder, though, the longer this takes, who you see it helping. Does a lengthy deliberation actually help the prosecution in this case?
You know, I think this is, so the common wisdom has always been that, you know, a quick verdict is usually a guilty verdict. Yeah. And the longer it goes on, the more likely it's going to be either a hung jury or an acquittal. You know, that has certainly, especially in high profile cases, that conventional wisdom has gone out the window. The O.J. Simpson verdict, for example, was quick and obviously an acquittal. You know, here I think that, again, that conventional wisdom might not necessarily hold because, look, the case itself, no matter who the defendant is one that has a lot of moving parts. So the jury is going to want to take their time and be very deliberative about it. But also, these are human beings who know that they are dealing with a historic, truly momentous and unprecedented situation here with the former president of the United States facing criminal conviction. And that is a serious matter. So I think they're going to take their jobs very seriously. So I think that if they take their time to make sure they get it right, that in this case perhaps is not as indicative of whether it's going to be an acquittal or a conviction as it might be in the run-of-the-mill case. But I do think, you know, if we're looking at going into next week, you know, then we're going to be looking very closely at what questions are coming out of the jury room to try to get a sense of where the jury is. Those questions, I think, will be very interesting to watch and will be read as tea leaves of what the jury is thinking.
Surely. Well, we're less than 2 hours in so far. We'll see how long this ultimately takes. Elizabeth Wydra, Constitutional Accountability Center President and Supreme Court litigator, thank you so much. We have no time frame, Joe, as to how long it will be before we actually get a verdict from this jury. What we do know, though, is that verdict is going to be coming well before not just the presidential election, but the Republican convention, which, of course, is in July. All of this is running into very interesting
It's incredible to think that we're in the throes of a campaign here. And as Donald Trump waits word on his fate, Joe Biden leaving the bubble today to go to Pennsylvania, talking about some hard issues that have been dogging him on the campaign trail, including Israel.
Yeah, absolutely. And perhaps the spotlight is even more sharply on the question of Israel after the events of the last several days with 45 people killed in Rafah, though the White House maintains that Israel has not, in fact, crossed its so-called red line, at least at this point. What we're hearing from Israel, though, today is that they think this fighting is going to last for a significantly longer period of time. 7 months to be exact, getting us to the end of the year. Ian Marlowe is with us now. He is a senior reporter covering diplomacy for us here at Bloomberg. So, Ian, we obviously are hearing signs from Israel that they do think that defeating Hamas ultimately is going to take a significantly longer period of time. At the same time, it feels that the patience of the Biden administration when it comes to their effort in Rafah is going increasingly thin. So how much longer can Israel continue with the continued support of the U.S. in terms of still getting everything that the U.S. is currently providing?
Yeah, it's a good question. I mean, I think, especially this week, everyone is asking that question. And I think we got a little bit of a preliminary answer from the Biden administration, which is there's still more leeway here. They still think to some degree that the only thing riskier than continuing on the current Israel policy is changing the Israel policy. So, I mean, you saw a little bit of a flavor of that when they paused that heavy bombs shipment a couple of weeks back now. It infuriated Republicans. It annoyed people on the left because they wanted more. They wanted like a bigger halt to
shortly expecting the results of the Fed reverse repo operation.
It blew up in their face in Israel, where Netanyahu almost looked like stronger at the end of the day because he was able to kind of be a little bit more defiant and sort of vow to press into Rafah even more. So to some degree, there's a host of bad options here right now for the U.S. And I think it's clear that Israel has not done enough to sort of go over that red line. The difficulty for the U.S. now, with Hamas reconstituting in North Gaza, I think people thought maybe Rafah would be the end of the war, right? That this would be, once they pushed into Rafah, that would be it. They would get Hamas leadership and it would be over. But that's, not the case. It looks like this is going to go on for, potentially into the next term of whoever wins in November. And so I think the longer this drags on, the more difficult it is for the administration, for sure.
Well, of course, the administration is spinning a couple of plates right now. The other would be Ukraine, or one other would be Ukraine. Interesting to see the Deputy Treasury Secretary in Kyiv this morning, Wally Adeyemo, on his first visit to Kyiv, spoke with us a short time ago about sanctions
75 counterparties take $459.314 billion at the Fed reverse repo operation.
Our allies and partners are going to be open to sanctioning any company or individuals that provide material support to Russia's military industrialized complex, because we want to make sure that Russia doesn't have access to the goods they need to fight the war they want here in Ukraine.
We're going to have our full conversation for our viewers and listeners a little bit later on this hour with the Deputy Treasury Secretary. Does his visit suggest that sanctions have been a failure so far? Is it time for secondary sanctions?
That's a good question. I mean, I think the issue here really, what he's talking about is China, right? I mean, Chinese companies, the Chinese government has been willing to provide that sort of support to Russia in a way that I think caught a lot of U.S. officials off guard. I think American officials in the early days of the war, especially after Ukraine mounted a kind of valiant defense of Kyiv, that this was, that the sanctions were going to cripple Russia's military industrial complex, and that would be it. But over time, we've seen with Chinese support, Russia's been able to reconstitute their base, and they've made a lot of gains. And I think that's really worrying for U.S. officials. And I think there's been a lot of warnings. We got those warnings from Janet Yellen when she visited China. Blinken, when he went, I was on that trip, kind of echoed that message. And this is another sort of reassertion of that. I think probably serving to remind China here that if they don't clamp down a little bit on some of those companies, the U.S. is going to do it for them.
Really great to have you back, Ian. When he's not traveling with the Secretary of State, we try to get him here at the table in Washington. Bloomberg senior reporter covering diplomacy, Ian Marlowe. Great to have you. And Kaylee, these are some of the stories we're going to be following over the course of the rest of this hour. We'll hear this conversation I had earlier with Wally Adeyemo a bit later on.
Yeah, looking forward to it. But our political panel is on the other side first, right here on Bloomberg.
DOJ or other authorities
could face bigger challenges.
Britain's next.
It was going to keep rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Hello.
Hey Emily, welcome to YouTube.
On the next episode of The Circuit, how YouTube became bigger than Netflix.
You know, YouTube's really kind of its own sort of unique thing. We're really still in the early days of our growth story and fulfilling what our mission is, which is to give everyone a voice and show them the world.
Watch new episodes of The Circuit on Bloomberg Originals.
The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board. Another weak sale of treasuries, raising concern about swelling supply that could keep driving yields up at a time when the Fed is signaling rates will be higher for longer. S&P down 31, 52.74, drop right now of 0.6%. The Dow down 1%, lower by 376 points. NASDAQ down 0.4%. 10-year 4.61%, the 2-year 4.98%. Gold down $19 the ounce, down 0.8%, and West Texas Intermediate crude down 0.7%. Big move to the upside for a lot of retailers after earnings. Abercrombie & Fitch up now by 22%. Chewy after earnings up 28.8%. Dick's Sporting Goods up by 15% after earnings. Again, recapping, stocks lower. S&P down now by 0.6%. Balance of Power continues. Back we go to Washington. And once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at where things stand about 4 hours into the trading day. Meanwhile, we're about 2 hours in to jury deliberations in the hush money trial of Donald Trump, in which he's facing 34 felony counts of falsifying business records after being read extensive instructions by the judge, Juan Merchan, earlier today. There are now 12 people, American citizens, jury of his peers, sitting in a room to decide, Joe, whether or not he ultimately will be acquitted, convicted of these crimes, or perhaps end up in a mistrial.
That's right. And 6 alternates have to sit through this in the courtroom in case they are needed. Pretty remarkable. We did see Donald Trump a short time ago. He called it the trial rigged, as we've been hearing. He says Mother Teresa wouldn't be able to beat the charges outlined here. So he's clearly setting expectations, as is his campaign. And we have to talk about the political implications here. And for that, we have our great political panel. Lisa Camuso Miller is with us, Republican strategist, former communications director at the RNC and host of the Friday Reporter podcast, alongside Jeannie Shanzano, Bloomberg Politics contributor, Democratic analyst. Great to have you both with us here. Lisa, I don't know your thoughts on what is about to transpire, but the campaign doesn't have the luxury. You have to start mapping out various possibilities here, various scenarios. What's happening inside Trump HQ today?
You know, Joe, it strikes me that if you're the Trump campaign, you're going to proceed exactly the way you have been planning to proceed. You call this what they've been saying all along, is that this is an overreach of government, that it is just the kind of thing that is going to happen to someone like Donald Trump, and you proceed strongly with that kind of that sort of positioning. If you're the Biden campaign, however, there are two very different scenarios that could play out, actually three, really, if there's a hung jury. So there's a lot of opportunity for them to sort of think about how they're going to position themselves. Regardless, though, we should probably be expecting from the Biden campaign to hear that this should not be happening with someone who was a former president, regardless of the outcome.
Well, Jeannie, it kind of raises the question for me as to whether or not acquittal or conviction for Donald Trump can be played as a win. If you're acquitted, obviously you are not a convicted felon. If you are a convicted felon, that has shown an incredible power to fire up and galvanize your base of supporters. Whereas for Joe Biden, if Donald Trump is convicted, it could galvanize Donald Trump's base of supporters, not bring more people into Joe Biden's camp necessarily. And if he's acquitted and that's the only trial that goes, you lose a lot of ammunition when trying to counter him in a campaign. Is this win-win for Donald Trump, lose-lose for Biden?
You know, I don't think so, unless the Biden team overplays its hand on this. The reality is that this campaign is not going to be won or lost in a courtroom. It never was. It's got to be won or lost at the ballot box. And so I am suspect of what the Biden campaign did yesterday by bringing folks like Robert De Niro down there where the media are. I think you look at what's happening today. Donald Trump is saying to his folks that if I am convicted, I will appeal. It will endear me to voters. For example, African-American male voters who think the system is rigged. You juxtapose that to what Joe Biden is doing today with Kamala Harris, with Wes Moore, and with others. He is going into Philly, 2 campaign stops there, to talk about what he has done for African-American voters. I'd much rather be the Biden campaign at this point than I would fighting for my life in the courtroom like Donald Trump and saying, worst case scenario, I'm convicted. And boy, that's going to make me a sort of, appealing figure to people who think our justice system is rigged.
Mm-hmm. Yet, this criminal trial underway for 6 weeks has done nothing to damage Donald Trump's numbers, certainly in polls. Lisa, he actually eclipsed Joe Biden when it comes to fundraising for the first time in this cycle just last month. Do we have any reason to believe a verdict would change that?
No, I really don't think so. I mean, what I think we're looking at here is traditional campaigning, which is what you're seeing with the president taking his campaign to Philadelphia today. And you're seeing campaigning in 2024, where Donald Trump comes out from the courtroom and says a couple of things that are perhaps a little bit insane. For lack of a better way to put it, the fact that he talks about even how Mother Teresa couldn't escape this verdict. But regardless of all of that, it's the traditional campaign, and it's what's happening in 2024. And one is winning and one is not. Regardless of where you are on these two candidates, the difference is that Donald Trump is using this craziness and the insanity that is the courtroom to his advantage, and it's got him winning up against Joe Biden, who's running a traditional campaign.
And Jeannie, it's worth pointing out while we're talking about this case in New York that was brought against him, he also has been charged with dozens of other crimes, 3 different other cases, 2 of them federal, one of them, of course, a state case down in Georgia. And the federal case, at least one of them here in Washington, brought by Jack Smith, is currently held up as we await a decision from the Supreme Court as to whether or not Donald Trump has presidential immunity. And there have been calls for one of the Supreme Court justices, Samuel Alito, to recuse himself from cases related to January 6th in particular, after reports of flags that were carried by rioters at the Capitol on January 6th were flying outside 2 of his homes. We just heard in a letter to Congress from the justice, Samuel Alito, that he is rejecting calls to step aside from those January 6 cases. He will not recuse himself from Trump or January 6 cases over the flag reports. Jeannie, what's your reaction to that? Perhaps not too unexpected.
Not unexpected, but this is an example of something, and I'm so glad you raised this, that I think the Biden campaign should make a lot of hay about. These are things that impact all our lives. Those 9 people have the final word on what the Constitution means. Not that long ago, Justice Alito voted to take away a right that women around this country have enjoyed for over 50 years, the right to choose. And he has done that. And then he has hung and blamed his wife for hanging a flag upside down in the days after January 6th and said he will not be moved to recuse himself. This is something the campaign should be talking about. Joe Biden should come out and take a stand and say, you know what, Congress, it is time to put in either a retirement age for Supreme Court justices, pack that court, do something, because our rights are being limited by the folks on the court, 3 of which are Donald Trump appointees. I don't think, though, Joe Biden's going to do it, but gosh, I hope he would, because this is the kind of thing that really matters to people much more than what happens in Manhattan to Donald Trump because of his hush money payment.
Pack that court. Jeannie just said, Lisa, what does that mean if that happens to the Biden campaign?
You know, when some of Jeannie's points are so salient with me that they're still sort of sticking in my brain. I think the one thing that I take away from all of this is that there is a constitutional crisis in this country. Not only does the Supreme Court have no oversight, and they are the law of the land regardless of how they behave outside of the court, as we're seeing in real time. We're also looking at a case where there's a question about whether or not the president or former president is immune to all of these cases as they're coming through. And it's all of these things are a question of the Constitution. And so that really comes down to where is the accountability? And that, to me, is someone who's watching from the outside looking in, not necessarily from the campaign point of view, is how do you communicate that out to people who fundamentally are beginning to believe or already believe that the process, whether it's the electoral process or the Supreme Court process, is fundamentally broken in this country? And that, to me, is one that I think is going to take people to the polling places in November, because I feel like they are really sort of fundamentally questioning whether or not our government is still working the way it's supposed to work.
Yeah, well, and Jeannie, just to give you the final word here as we consider what people are questioning about our government and the people currently sitting at the helm of it, we've heard a lot about how the coalition that elected Biden into the Oval Office in 2020 is starting to break down, be it younger voters, be it voters of color, Black or Latino kind of Americans. He obviously is trying to address one particular of those groups in Philadelphia today. But how much do these questions around things like democracy and the Supreme Court and faith in these institutions actually service the Biden campaign? Or when you are kind of seen as the poster child for the institution of government, does it only actually end up working to hurt you? You're the figurehead.
Yeah, I think the issue of democracy being on the ballot has helped the Democrats since the Dobbs decision and January 6th, which are 2 things that have happened, obviously, since Donald Trump lost the presidency. And Joe Biden's got to keep talking about those. To the Supreme Court and democracy's point, if Donald Trump wins, he will likely be able to appoint 2 more Supreme Court justices. Keep reminding people that would be a 5-4 majority of Donald Trump appointees on the court, and your grandchildren will likely be alive before these people are off. They have no elections. They serve for life. Joe Biden's got to keep saying this. And I'm saying this as from a strategy perspective. So that's what they've got to be talking about, not sending an 80-year-old actor down to Wall Street to fight with Donald Trump supporters. I mean, to me, it's mind-boggling what they did yesterday. He's right to be in Philly today. He should be talking about Alito not recusing himself. And these are the kinds of issues that people care about and will come out, to Lisa's point, and vote on.
All right, our great panel with us today. Thank you so much, Jeannie Shanzano and Lisa Camuso-Miller, for a great conversation. If you're with us on Bloomberg TV, showing you images there a second ago of Joe Biden on the ground campaigning in Pennsylvania. Thanks to our panel. We'll have more from our panelists tomorrow. And later in the hour, our conversation with Wally Adeyemo, the Deputy Treasury Secretary on the ground today in Kyiv. First, world and national news. For that, we turn to Amy Morris in the Bloomberg 99.1 newsroom here in Washington. Hi, Amy.
Hi, Joe. Thanks so much. Criminal charges against against Scottie Scheffler have been dismissed. That ends a legal saga that started with images of the world's top male golfer being arrested and handcuffed in Louisville during the PGA Championship. Scheffler was charged with a felony for assaulting a police officer with his vehicle, along with 3 other misdemeanors. He said he simply misunderstood the commands coming from traffic officers. Jury deliberations are underway in former President Trump's criminal hush money trial in New York. In their closing arguments yesterday, prosecutors reminded jurors of evidence and testimony they say points toward a scheme to protect Trump from damaging information about him prior to the election back in 2016. Trump's lawyers maintain he did not commit a crime and painted the prosecution's star witness, former fixer Michael Cohen, as a liar. Trump faces nearly 3 dozen charges related to falsifying business records, but the jury has the case now. Secretary of State Antony Blinken has pledged $135 million to aid in Moldova for energy security and to counter Russian disinformation.
At 1:45 p.m. Eastern Time, we expect comments from Feds Williams, who joins the Watertown Community Services Roundtable in Watertown, New York. No text is expected.
Whenever you want it with Bloomberg News Now, I'm Amy Morris, and this is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company, but I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
At 1:45 p.m. Eastern Time, we expect comments from Feds Williams, who joins the Watertown Community Services Roundtable.
Context changes everything.
It's 1:40 on Wall Street. We do check markets all day long at Bloomberg. A slide in bonds is dragging down stocks as another weak sale of treasuries raises concerns about swelling supply that could keep driving yields up at a time when the Fed is signaling rates will be higher for longer. Here's where we stand. S&P now down by 32 points, drop there of 0.6%. We've got the Dow down 370, a decline of 1%, while NASDAQ is down 70, a drop there of 0.4%. 10-year, 4.61%. The 2-year, 4.97%. Spot gold down $18 the ounce to $23.42. For gold, a drop now of 0.8%. West Texas Intermediate crude down 0.6%, $79.35 a barrel. American Airlines shares are plunging. American now down by 15.2% after issuing a revised profit outlook that adds to uncertainty of the aviation industry, already grappling with geopolitical tensions, scarce supplies of new aircraft, and rising costs. UAL, Narrative United, up 0.7%, with Delta down 1.8%, JetBlue down 4.9%, Southwest Airlines down 4.8%. Recapping stocks lower, S&P down 33, drop there of 0.6%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie, we thank you. We'll get back to the markets a little bit later on this hour, as we always keep tabs on Wall Street here on the fastest show in politics. Thank you for joining us on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons in Washington. With news today, the Deputy Treasury Secretary, Wally Adeyemo, has touched down in Kyiv. His first trip to Ukraine now as part of the administration's efforts to shore up Ukraine's economy and, of course, support Ukraine in its war with Russia. He is the administration's point person, the Treasury's point person on sanctions, which is partly what brought him to Kyiv this week. And I had an opportunity to spend some time talking with him first, knowing that air raid sirens were blaring in Kyiv just moments before he joined us on Bloomberg TV and radio. I started by asking him about the mood on the ground. Here he is.
The mood in the capital today is one of urgency in terms of doing everything they can to defend their country. And I've been impressed by the brave men and women here in Ukraine and the fact that they are committed to fighting for their freedom and doing everything they can to build an economy and to build a free and democratic country. And I'm here because the United States wants to be their partner in doing exactly that. And in addition to talking to them about sanctions, I've been able to talk to them about our economic support and the ways in which we can make sure that the United States and our allies and partners stands with the brave men and women of Ukraine.
You said just yesterday on your tour in Kyiv that an unacceptable amount of weapons components are still getting into Russia. There's a sentiment that sanctions are simply not working. As the Treasury's point man on sanctions, does your trip confirm that?
My trip confirms that we need to do more to make sure that our sanctions continue to stop Russia from being able to get the goods they need to build the weapons that they want. What we know is that the Kremlin has charged their intelligence services with trying to get around our sanctions, and we are concerned that Russia is getting access to key component parts, particularly from China, in other countries that are allowing them to build these weapons. And what I'm here to do in Kyiv is to talk to my counterparts about the new tools we're considering to try and go after the ability of the Kremlin to do just that. Fundamentally, we can't do this alone in the United States. We need to do it with our allies and partners, and that's why I'm heading from here to Germany to give a speech and talk to my German counterparts about the importance of us acting together to stop those components from getting to Russia.
Well, we're looking forward to that speech in Berlin. Will you announce secondary sanctions against those responsible for those components getting into Russian weapons?
So I'm not going to preview any actions that we're going to take, but what I will say is that I'm going to talk about the fact that the United States and our allies and partners are going to be open to sanctioning any company or individuals that provide material support to Russia's military-industrialized complex, because we want to make sure that Russia doesn't have access to the goods they need to fight the war they want here in Ukraine.
Well, I know that there are a few components to this that also include unlocking money from frozen Russian assets. I know Treasury Secretary Janet Yellen is working on this right now with our G7 allies to use those proceeds for Ukraine. When can Kyiv plan to get that money?
It's important to give people context. When the war started, the United States and our allies and partners immobilized $285 billion of Russians' assets that were held around the war, a war chest that they had set up for this particular situation so they could use that to conduct the war that we were able to mobilize. Now we're looking at ways to unlock those assets. Only $5 billion of them are in the United States, but collectively over $200 billion are in the G7, and our countries are working together to think about ways in which we can unlock the value of that for the benefit of the Ukrainian people. Secretary Yellen at the G7 finance ministers worked with her counterparts to set out a number of options that are now going to be given to leaders who are going to meet in June, and we look forward to those leaders when they meet in June giving us political direction in terms of how we can unlock that value so that we can get that money to Ukraine so they can invest that money in rebuilding the infrastructure that Russia has destroyed and in defending their country.
Well, talking about recovery here and rebuilding, you spent time earlier today at a roundtable at Kyiv's School of Economics. What was your message to the room?
So I think the most important thing for me was how that roundtable started, and it started with them giving me a tour of their bomb shelters, because today, for almost any school that operates anywhere here in this country, they have to have a bomb shelter, which is unacceptable that young people have to live in a world where their education is conditioned on the idea of having access to those shelters. But those young people were focused on helping to think through two things. One, how sanctions can be used to slow down Russia's ability to build the weapons that they want, but also on how they can build a successful economy here in Ukraine. And I had a chance to talk to them about the things the United States and their allies and partner are doing to support them in both of those efforts. And it was impressive to see these young people who are focused on those issues and knowing that over time, those same young people are going to be contributing to the growth of the economy here in Ukraine and to the growth of their democracy as well.
Well, we can't talk about sanctions, sir, without talking about oil. And it does seem that phase 2 of the oil price cap does not seem to be costing Moscow the extent to which it was expected to. How can the Treasury Department get to this?
So I think the key word you said there was cost. Oftentimes when we focus on the price cap, we focus on the revenue side and the cost of a barrel of euros. But the reality is that Russia's costs have went up significantly due to the price cap. Before the price cap, Russia was largely selling their oil to cheap places and using the G7 services to do so. Today, the cost of selling Russian oil has went up significantly because they've got to buy new tankers, because we went after some of the tankers that they're shipping the oil in. They've had to build up their own ecosystem to sell that oil, which has been more expensive for them. And our goal is to make sure that in addition to reducing their revenues, we significantly increase Russia's costs so that ultimately they have less income to give to the Kremlin to fight this war. But what the Kremlin is proving to us every day is that they are indifferent as to revenue. They are focused almost exclusively on building a wartime economy. And the best symbol of this is the fact that when President Putin replaced his defense minister, he replaced it with an economic official who's going to be focused on making sure that the Russian economy produces one thing and one thing only, which are the weapons that will help support this war. And our goal has to be to make sure that they don't have the goods they need to build those weapons.
Mm-hmm. I have less than a minute, sir. You're talking about sanctions and Russia's economy in Kyiv. That's why we're together here. It was some time ago that U.S. sanctions were supposed to grind Russia's economy to a halt. We have not seen that happen, at least in the way that it was designed. Will the announcements, will the tools that you're rolling out this week in Ukraine and in Germany finish the job?
So it's important for us to think about how we measure success when it comes to sanctions, which are a tool. And the way that we measure that is on Russia's ability to get access to the goods that they need to fight the war that they want. It is, and from our standpoint, the key thing that we have to do there is to go after the companies and the individuals who are providing them with those goods. That is the way that we are going to judge our success, is if Russia has fewer weapons to be able to fight their war in Ukraine, and we're able to provide the Ukrainians with the goods and the military equipment they need to defend themselves.
That's the Deputy Secretary of the Treasury, Wally Adeyemo, with us live earlier from Kyiv. I'm Joe Matthew in Washington alongside Kaylee Lyons.
At 2 p.m. Eastern Time, we get the Fed's beige book.
Talking about the administration's approach to Israel. This is a stark reminder that there are multiple hot wars underway that this administration is following. And in this case, it's one that is not turning in the administration's favor.
Yeah, and it's worth keeping in mind as well the ways in which these conflicts, the many different ones that this administration is grappling with, can be connected. As in the Middle East, there is the question over Iran and ties with parties like Russia. And of course, the big kind of elephant in the room in all of this and in the conversation with the Deputy Secretary is the fact that China is playing a large role in these sanctions not necessarily having their fully intended effect, not reaching maximum efficacy, if you will.
Yeah, there does seem to be a feel that this is simply not working yet, and whether a round of secondary sanctions could make a difference has yet to be determined. One of several stories that we're following today, Kaylee, of course, the other is coming out of the courthouse in Lower Manhattan.
Yes, indeed, where we are now just about 2 hours and 20 minutes or so into jury deliberations in the hush money case against former President Donald Trump. There are 12 members of the jury that are now charged with deciding whether or not he will be convicted or acquitted of any of those 34 crimes with which he's charged. Joining us now for more is June Grassa, who is the host of Bloomberg Law on Bloomberg Radio. So, June, we know that they are in there deliberating. What we don't know is what exactly is happening in that room, to what extent there are parties that do not seem to be aligned with each other among these 12 jurors. The fact that it has taken this long, is that telling at all when everybody was talking up a quick turnaround of a verdict?
No, I don't think it's telling at all. First of all, the last hour has been for lunch, so you don't know if they're actually deliberating over lunch or they're just talking about, the weather. So, but I mean, as I said before, even if they go in, and sometimes when jurors go in, they take a vote in the beginning just to see where everyone is. Is everyone for acquittal, for conviction? Is there a split here? So they may have done that, but then even if they had 12 in one direction or the other, I think they'd still want to go over the evidence because they know the import of this case. So I don't think it shows anything that they're out for 2 hours right now. Nothing at all. When they start being out before 4:30, maybe we'll start to think about the fact that there might be one or more jurors who are, not aligned with the rest of the jury.
Yeah. June, how much warning are we going to get? How's this going to play out when they do make their decision?
You're down the road. I'm expecting some jury questions before that. The jury often will send out questions, especially because this is, though it's the instructions, I've been looking at the instructions, they're easy to follow, but they don't have the instructions in the jury room with them. And under New York law, the judge doesn't allow that. And the judge said to them, if you have any questions, come back. So this happens a lot, that jurors will ask them to reread certain parts of the jury instructions. They may come out and say, we want to hear the testimony of Michael Cohen on day 2, or the testimony of Hope Hicks again. And then the lawyers would consult with the judge. They would decide whether they should do that or not, what part of the testimony they would read to them, et cetera, et cetera. And usually they'll read the testimony, and that takes a long time. Those readbacks take a long time. So even if there's not that much disagreement in the jury room, we can't read anything into it yet. And I think, when we see the notes, if there are notes, and I'm assuming there are going to be notes, but I could be wrong. If there are notes, then we all look at the notes and say, what does this mean? And we try to, get into the jury's mind. And it's futile, but we still do it, especially if you're in the courtroom and you're covering and you're like, what does this mean? The jury wants this, the jury wants that. And it's just a guessing game from here on in.
And we're all just awaiting, I guess, answers to the very many questions that we have. Of course, a lot of what the jury is considering, though, as to whether or not it believes the testimony of those witnesses who gave their testimony, including, of course, Michael Cohen, the prosecution's star witness. There was a lot in the instruction about him specifically, that he was an accomplice to Donald Trump in this instance. What can or cannot be allowed to be considered by him, the idea that he didn't necessarily have to be believed. How much of this is just going to surround questions of whether or not they viewed him as credible?
Well, I think that the prosecution will say, and of course the judge's instructions are, you can believe a part of his testimony. You don't have to believe all his testimony. You can believe part of it. And the prosecution is going to say, as they did in their closing, that his testimony is backed up by all these different records. And it just makes common sense that you know what was going on here. I mean, that was basically their thing. And I don't think that the jurors necessarily have to believe
at 2 p.m. Eastern Time. We get the Fed's beige book.
Lied and has lied, and and lied on the stand, basically. But do you believe the parts of his testimony that are supported at least by the evidence? And what the jury instruction says about him being an accomplice, which he is under New York law, is that because he's an accomplice, you can't base your whole decision on his testimony. You have to find that his testimony is corroborated. And the prosecution in the closing, went over and over the different ways that his testimony is corroborated. So it'll be definitely
June
a point.
Grasso.
Sorry.
Thank you, June. This is why you don't want to miss Bloomberg Law. We'll have more in Balance of Power at 5 on Bloomberg.
You look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, to dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire
1 minute remaining.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. It is a Fed Wednesday. It's a
Carol,
Fed Wednesday.
Not Tuesday, it's Wednesday.
Believe me, now I know. I'm counting down to Friday already. May 29th, we are awaiting the Beige Book crossing the Bloomberg terminal any moment. So as soon as those headlines do cross, we're going to bring them to you. As you know, it's anecdotal information from the Fed regional banks and gives you some clues about what's going on in the economy and what they are seeing in terms of business activity and consumer activity. So we'll bring them to you. Hello, everybody. Live radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week. We're going to get to that, but we have a few other things, Tim, on our agenda as well.
Yeah, stocks and bonds lower following another week sale of treasuries. We're going to have more on markets, too, in just a minute. Also, Carol,
So according to the Fed's Beige Book, the national economic activity continued to expand from early April to mid-May. However, conditions varied across industries and districts. Overall, outlooks grew somewhat more pessimistic amid reports of rising uncertainty and greater downside risks. Prices increased at a modest pace over the reporting period.
Weight loss drug shortages we keep talking about. Well, there's an app or a tracker for that. The CEO of the startup Row is going to be with us to explain.
Yeah, looking forward to that. Our Madison Muller, who follows this sector too, will join us for that. One more thing, Panda diplomacy having a bit of a rebirth. We're going to dig into that in just a moment.
That's our one more thing. First up, though, a check of the day's trade and top business stories. Welcome back, Charlie Pellet.
Indeed, glad to be back. We've got the Dow, the S&P, NASDAQ very much in the red right now. Right to the numbers. S&P down 27, drop there of 0.5%, slide in bonds, dragging down stocks. We've got the Dow down 357, down 0.9%. NASDAQ down 46, a decline of 0.3. 10-year, 4.61%. The 2-year, 4.98%. And West Texas Intermediate crude oil trading lower by 0.6%. Gold down by 0.7%. BHP Group says it will not be making a firm offer for Anglo American before today's deadline, walking away for now from what would have been the biggest mining deal in over a decade. And in the oil patch, ConocoPhillips acquiring Marathon Oil in an all-stock deal valuing the company at about $17 billion. Marathon up 7.6%, ConocoPhillips down 4.1%. Recapping, S&P down 26, drop there of 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, welcome back from me as well. All right, folks, let's get to it because the Fed Beige Book, of course, our focus on this Wednesday. Let's get to it with our own Bloomberg News international economics and policy correspondent, Michael McKee. He's joining us here in studio. All right, so it's just out. You've been reading it furiously.
If you were going to describe it to somebody, you'd call it beige. I mean, this was written by a two-handed economist. National economic activity continued to expand from early April to mid-May. However, conditions varied across industries and districts. That's the first sentence, which is always sums up what the report says. So conditions varied. Most districts reported slight or modest growth. 2 noted no change in activity. Retail sales flat to up slightly, which is what the data have shown us. And auto sales roughly flat, they say. Travel and tourism strengthened, but of course we're getting into that spring break season that this covers, so that's
And according to the Fed's Beige Book, retail sales indicate a lower discretionary spending.
Rose at a slight pace overall. 8 districts reported negligible to modest job gains, and the remaining 4 districts reported no change. Better labor availability, they say, although some shortages remain. Employee turnover has decreased, and one noted that employers' bargaining power has increased. Hiring plans mixed. I mean, this is like
the painters are coming in. They're painting the studio beige in honor.
What does this tell you about what they're going to do? Prices increased at a modest pace. Contacts in most districts noted consumers pushed back against additional price increases, which led to smaller profit margins.
Okay, so net, given what you've read, by the way, there are 48 more pages that we haven't yet gotten to.
Put everybody to sleep.
Fed friendly or not Fed friendly?
It's Fed friendly if you think that the Fed is looking for support for doing nothing, because this basically tells you that the economy is still plugging along. There's no negative adjectives in here. The positive adjectives are very beige, as we've been saying.
Yeah. This is the three-day weekend version of the beige book.
Yeah, it tells you what you already knew about the economy.
Kind of good, Mike, in that there's no like, wait a minute, we're seeing inflation flare up here or something.
Yeah, if you take two things away, one is that they're not seeing continued rise in inflation. Modest pace is what they say, and that there's no sign that the economy is falling off a cliff. So they don't have to do it. They don't have to raise rates to choke off inflation. They don't have to cut rates to prop the economy up.
No stagflation, no stagflation.
No stag, no inflation. It's not bad, but not exciting.
What about this part where it says that consumers push back against additional price increases, which led to smaller profit margins as input prices rose on average? What power does the consumer have to push back on price increases?
Well, you stop buying, basically, and the retail part noted that people had pulled back on buying. And so I think probably retailers are reporting that customers are not buying X, Y, and Z because those things went up in price at this point. So, reasonably good news on that score.
And just listen, no surprise, because it's beige, this beige book. I'm looking at, the Treasury curve. I know we've had a bunch of auctions and some disappointment there. But you've got a 10-year note. It's at 461, 2-year note with a yield of 498. So pretty much where they were, I think exactly where they were prior to the beige book. And on the equity side of things, not seeing really any reaction as well. But it was just curious. I don't know. So then, before we move on, in terms of the beige book, Mike, how do you use it? Is it important in that it's more current information and that's a good thing, or like how do you? Or is it not?
It's relatively current. It's since the last beige book, since the last Fed meeting, so it gives you a snapshot of what was happening over the last month or so. But we've talked to a lot of Fed Bank presidents lately who have said the same thing. This is what CEOs and consumers are telling us in our districts. So there's no surprise here. Once in a while you might get a big surprise, but for all the talk about how much Fed officials talk and whether it's too much or not, a lot of the data that we get now is not a surprise, because that's what they've been telling us is going to come.
Yeah. Okay, speaking of data, we got consumer sentiment, consumer confidence, yesterday. We get the Fed's preferred inflation reading later this week. We got beige book today. How are you thinking about all of it?
The one that matters is the consumer is the PCE inflation number, personal consumption index, and it's what the Fed uses as their target, the headline number. So they definitely want to see progress there, and we've talked about the inflation nerds who go through and figure all this out to make their forecasts, and several of them think that we might see a better than expected number, which would be good news for the Fed, and of course it would get the markets maybe moving again one way or another as they try to take advantage of whatever they think the Fed will do.
Yeah. Speaking of Fed speakers, Kashkari, certainly something that's being read on the Bloomberg terminal today. Minneapolis Fed President Neil Kashkari talked about that, the Fed hasn't ruled out entirely additional interest rate increases, but we were talking before we got going. You said nothing new, like he said this before.
Nothing new from him, and John Williams has said it. Even Jay Powell talked about it at his last press conference. Traders got to trade. So it's something for them to trade on. But if you look at what he actually said, he said, we're not ruling out anything. He didn't say we're considering.
Right.
And that's the same language, basically, that everybody who's talked about it has used. It's their job to be prepared to do whatever is necessary.
It's kind of a beigey day. We have one more thing we want to ask.
Yeah, speaking of jobs, a new job for Beth Hammack, a Goldman Sachs veteran over at the Federal Reserve Bank of Cleveland. What do we know about her?
Well, she's been on Wall Street for 30 years at Goldman and has had a variety of jobs there. She left in February at a time when a number of women were leaving Goldman because they were feeling like Goldman was not supporting women moving up in the hierarchy there. So it's interesting that she ends up with this job. But she worked, she was on the fixed income side and on trading desks for most of her career at Goldman. And she was the head of the Treasury Borrowing Advisory Committee, which is a group of prominent Wall Street bond people who advise the Treasury on how much debt to sell, how to sell it, the buybacks that just took place. We probably have a result on that right now. This is the first of their buybacks since 2000, and I don't see a result yet, but it should come out soon. They're buying back treasuries to create liquidity in the markets. And that was one of the things that the Treasury Borrowing Advisory Committee suggested. So she's got a lot of market experience.
Yeah.
And that
seems
should
relevant. Good.
help the Fed as they go forward.
All right, good stuff. All right, as we all switch into our beige clothes, we're going to move on. Michael McKee, but appreciate it because it's always good to know, even if it's just the same message, that's a good thing for markets to know. All right, that is, of course, Bloomberg News International Economics and Policy Correspondent Michael McKee. All right, so that's today's economic and Fed headlines. Let's get to, though, a headline in the M&A and energy space. Who'd have thunk?
Maybe Alex Steele. I don't know. We'll ask her. ConocoPhillips agreeing to acquire Marathon Oil in an all-stock deal valuing the company at about $17 billion. It extends a major buying spree among the largest players in the U.S. oil and gas industry. Back with us is Bloomberg radio and television anchor Alex Steele. She's a go-to for us when it comes to the energy world.
And she's wearing beige, like you knew something.
Beige.
This is cream, girl.
Okay.
Come on now. It's cream.
She also co-hosts Bloomberg Intelligence weekday mornings on Bloomberg Radio and The Close weekday afternoons on Bloomberg Television. So this deal, a surprise?
Yes and no.
Okay.
So
explain, please.
Devon was also rumored to be interested in Marathon Oil. We reported that maybe Conoco would also be interested in it. It's not a surprise in that there's been a ton of M&A in the space, and it was just a matter of who was going to be buying up and what was left to actually buy. I say yes in that Conoco has been very restrained, and Conoco usually moves ahead of the pack, and they bought Concho Resources back in the pandemic, and they haven't bought anything since, and they were really ahead of everything else, and they usually are the ones that kind of set the tone for the oil producers.
Yeah.
So going to buy, so then that was to me kind of interesting that they're going to go back and buy. They've been putting a lot of time and energy into LNG. So from that perspective, it was a little bit of a head scratcher.
What the heck is going on? Is it just, everybody kind of like, consolidation, like, why is it? Is it just bigger, better in this industry at this point?
Such a good question. Okay, so at the heart of this is the fact that if you're a portfolio manager or an investor, you can't own a bunch of oil stocks. You can own one, maybe two. So if you're an oil company, you cannot afford to be one of many. You have to be one of few because you're all competing for the same kind of capital from investors. And at the heart of it, that is what's happening in the M&A space. In addition to that, on a geographical level, there's only so much rock in the Permian. And there's only so much rock in the Eagle Ford and the Bakken. And Conoco has something a bit different with this one. And scale is master. And scale is master because when you're using shale, you drill down and then you drilled sideways. And that's called contiguous. And the more acreage you have sideways, the longer you can go and the more you can drill. And you have to go buy up all those areas. So that, in essence, is one part of it. For Conoco, this gives them more inventory in the Bakken and the Eagle Ford. Both of those have already been drilled, and they talked a lot on the call about refracs. So that's like, here's my well. I fracked it. I'm going to go back and refrac it and get more oil out. It's cheaper, but it's not going to be as good as the well that you first did.
Not as productive.
Right, but the production in the Bakken and the Eagle Ford has really leveled off. It hasn't had the same kind of explosive growth anymore as it once did, and so you can make an argument they're just literally building up inventory. Just straight up, here it is, stick it in the ground, get the oil out, get the money, bye-bye.
Regulators are going to say this is totally fine, and we approve this 100%.
No,
issues?
I think there's going to be problems.
Okay.
I'm not just me personally. I'm not a lawyer, thank God. But Vince Piazza, Bloomberg Intelligence.
We love lawyers here at Business
David
Week.
Weston, we love you. But
yes.
he thinks there are going to be issues because of the overlap in the Permian, the Bakken, and the Eagle Ford, for sure.
Meaning a geographic impact.
Yes. But also, on the flip side, there's still like 400 private players, small guys in the Permian. So you can't make an argument that there's only like 3 players and we need to keep it that way, right?
So what do? Sell off some stuff to get this deal through? Or
so they could do that. They did say that they will have to do some rationalization eventually. I'm assuming that that's what that meant. That was on the call. That would probably help. But they said they think it's, quote, pretty clean. I don't really know what that means. I don't know how you get pretty clean for the FTC.
You mentioned hundreds of other players.
Mm-hmm. 400 private players.
What are we talking about here? I mean, who
mom
are
and
these?
pops.
Okay.
I mean, some of them are obviously bigger than mom and pops. There's some private companies that have had like very big deals that have come out in the last few months. But a lot of them are just like small mom and pops that have just kind of gone with the flow over the last couple decades.
The reason I'm asking is because Carol and I were like, okay, who's left at this point when it comes to potential targets for acquisition?
So of the 3 big players that were talked about when Exxon first bought Pioneer, it was Endeavor. It's a legacy Midland play, and that was bought by Diamondback for about $26 billion. Crown Rock, also private, and that was bought by Oxy for a little over $10 billion. The other one that's out there is Mewbourne. I don't know anything about this company, but it is a Delaware basin play, sub-basin play. That hasn't had any M&A, but that's one out there, and that's one of the largest private players still left. And then there's a lot of small guys. And there's been some mid-tier acquisitions. Silverbow got an acquisition offer. So there are sort of the smaller ones teaming up. There's also Matador Resources have been floated by some analysts, Permian Resources, SM Energy, pretty much throw a dart and you'll find a company that's there.
So when you look more broadly at the space, I know we talked about this yesterday, and I just think about like what's going on in the exploration E&P space. I mean, are people still? I find it. I'm trying to get my head around. Okay, we're supposed to be moving towards more renewables and a cleaner, greener space, and yet I'm just curious, like how much is still going on in terms of exploration and looking for new sites and so on and so forth? Because we're going to be living with fossil fuels
for sure
for years, decades still?
Oh, yeah. I mean, demand growth may slow, but that doesn't mean demand goes to zero. And therein sort of lies the rub, right? You can look no further than what happened with Anglo American and BHP when you talk about the search for resources and the idea that it's going to be cheaper to buy than build. Now, many in the industry are going to debate that, and they're going to say, that's not true. That's not what this acquisition is about. This is about just really beefing up our portfolio. It just makes really good sense, yada, yada. But at the end of the day, if you're a producer, would you want to spend $1 bazillion going and searching for oil or copper or somewhere, and then dealing with all the regulatory issues, the geopolitical issues, the higher input cost issues, all the stuff, when you don't know what the profile is going to be like in 50 years, or do you want to buy something now that you think, with your technology and your expertise, that you can lower the cash cost by a couple bucks, and that makes you even more money?
So who's doing the exploration right now when it comes to oil?
Middle East. The Middle East is still definitely exploring because they have nice checks that they can cash. Like they just mint money from oil, and they can do that, and they are doing that. Yeah. And some of it's going to be gas, and some of it's going to be oil, and the other one is Guyana, off the coast of South America. That's really the big one.
But here in the U.S., not much exploration happening.
No. It's just Permian and other shale areas. I mean, there's Appalachia, and that's gas, and it's about using different technology to get better and getting more out when you are doing something than straight up sticking something in a rock and being like, let me see if I strike oil.
Before you go, because we had a great conversation about the energy space yesterday, and then the headline comes that the Hess investors voted in favor of the $53 billion deal offer from Chevron. What's next, though? It's not, is it done?
God, no.
I know.
No, they're still in arbitration. Okay. And I don't think anyone has any idea how long that's going to take. I know that Chevron's like, hey, end of year. I don't think anyone knows how long that arbitration is going to go. Maybe Hess and Chevron will go back to Exxon and be like, here, we're going to sweeten some stuff. We're going to give you something to just so you let this deal go through. But I don't know what the timeline of that really looks like.
Okay, so stay tuned again for that.
I'll be back.
Thank you. Always welcome. Anytime. Open door. Beige or no beige. Cream or no cream. Jinx. All right, Bloomberg Radio and television anchor Alex Steele, go-to for us always on everything in the energy world, joining us in studio. She's the co-host of Bloomberg Intelligence, weekday mornings on Bloomberg Radio, and the close weekday afternoons on Bloomberg TV. In fact, we will be talking with her in about an hour or so.
Hey, still to come as the big energy companies continue to drill down on deals in fossil fuels. Our world continues to get warmer. So are you ready for the Hurricane Katrina of extreme heat? Mark Gongloff from Bloomberg Opinion joins us next.
Terrifying. I have I have family who live in this region of the country. We're going to break down the details. That's coming up.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Hello.
Hey, Emily. Welcome to YouTube.
On the next episode of The Circuit, how YouTube became bigger than Netflix.
You know, YouTube's really kind of its own sort of unique thing. We're really still in the early days of our growth story and fulfilling what our mission is, which is to give everyone a voice and show them the world.
Watch new episodes of The Circuit on Bloomberg Originals.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A slide in bonds dragging down stocks. Right now, the S&P is lower by just about 0.6%. It is trading down by 29 points. We've got the Dow Jones Industrial Average in the red as well, down 382 points right now on the Dow, a decline of just about 1%. On NASDAQ, lower now by 0.2%. The NASDAQ Composite Index is down by 48 points. 10-year yield, 4.61%, with a 2-year that's now yielding 4.97%. Spot gold is lower by 0.8%, 23.41 the ounce. And West Texas Intermediate crude oil down now by 0.7%, 79.10 a barrel. American Airlines shares are plunging after issuing a revised profit outlook that adds to uncertainty in the aviation industry that's already grappling with geopolitical tensions, scarce supplies of new aircraft, and rising costs. American Airlines shares, they are lower now by 14.4%. United up 1.5%, but other airlines all flying lower. Right now we have got Delta trading down by 1.6%, Southwest Airlines down 4.4%, and shares of Southwest down now by 4.2%. So again, recapping, stocks lower, S&P down 29 right now, a drop of 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Hey, we did want to draw your attention to what is the most read story in the Bloomberg in the past 8 hours. It has to do with Jamie Dimon. Of course, you know, the CEO of JP Chase. He says he expects problems to emerge in private credit and warned that, quote, there could be hell to pay, particularly as retail clients gain access to the booming asset class. And here's the quote: do you want to give access to retail clients on some of these less liquid products? Well, the answer is probably, but don't act like there's no risk with that. And he said this at an industry conference today. He says retail clients tend to circle the block and call their senators and congressmen. It's interesting. I feel like you and I have been talking about this. We talked about it with one of our guests from Moody's yesterday about maybe where there might be some trouble spots.
Well, JP Morgan and other lenders have been competing with the $1.7 trillion private credit industry with giants such as Apollo, taking on ever larger deals. Banks have sought to make inroads of their own. JP Morgan has earmarked more than $10 billion of its own balance sheet for direct lending, and it's putting together a co-lending partnership. Its asset manager is also on the hunt to buy a private credit firm, Bloomberg reported just last week.
Yeah, it's interesting, right? We've heard, we've talked about shadow banking, right, and all the lending that is going on among the private credit lenders. A lot of the big investment firms, PE, private credit firms, if you will, the alt asset managers. But you have seen the traditional banking system, too, either create partnerships with various folks in the private credit space as they look to also be able to tap into this market. All right. Anyway, you can read the whole story. You can find it on the Bloomberg. It is our most read story in the past 8 hours. We do want to get to now a new book that is out. It writes about the likelihood of a, quote, Hurricane Katrina of extreme heat, an event in which a power failure during a heat wave kills thousands of people, with government authorities dangerously unprepared. The expert calls such an event about as likely as another intense hurricane hitting New Orleans. Quote, it's more a question of when, not if, Tim.
Writing about this and why Heat Katrina may already actually be happening is Bloomberg opinion editor Mark Gongloff, who covers climate change. Check out Mark's story and more from Bloomberg Opinion on the Bloomberg Terminal. Mark, good to have you with us this afternoon, although as always, when you write about these things, the circumstances
you freak us out, Mark.
Are a little bit freaky, to be honest. Talk a little bit about what's going on in Phoenix, which, by the way, seems like the hottest city to move to for a few years now. And I'm not talking hot just in heat. People are moving to Phoenix.
Yeah, people just can't get enough of moving to Phoenix. They go for the cheap housing and they stay because for maybe 6 or 7 months out of the year, the sidewalk doesn't give you third-degree burns. But the rest of the time, it does. And the rest of the time, it's very hot. It's always hot in Phoenix, but last year, it was the hottest it's ever been. You had a month with 110 degrees every day. I think it almost never got below 90 during that time. And so at night, it was still 90 to 95 degrees. And during that time, during the past 5 years, 2,000 people have died in Phoenix. And this is what I talk about. That's it. The numbers keep going up. When we think about a Hurricane Katrina, this was a massive hurricane, hit a massive city. A lot of people, nearly 1,500 people died roughly. And government authorities were unprepared to protect the most vulnerable people. This is a thing where over 5 years, we've lost even more people. But it's kind of been harder to notice just because it's taken a longer time. This is something that is going to affect more and more cities. And, as Carol pointed out at the beginning, there is the possibility that it could hit all at once. If you get Phoenix or any other major city, you get a heat wave plus power outage, suddenly a lot of people lose AC, and then you have a lot of people in a lot of danger. In Phoenix, you have people who don't have AC at all, ever, including unhoused people and people, the elderly, and people who can't afford to fix their AC units, which are just working overtime. And most of the deaths happen in those circumstances.
Mark, it feels like, we talk about perfect storms, certainly in the financial world, but I think about these perfect storms of potentially because of climate change, where, as you say, it gets so hot. All right, they have air conditioning, but if the power goes out, it doesn't matter. I feel like I've dealt with that with flooding. I've got a pump, but if the power goes out and I don't have a generator, it doesn't matter. So So what can be done? What is being done? You write about in Arizona that they actually have a heat team to address some of these concerns. Talk to us a little bit about this, but then, of course, there's a problem to that as well. But go ahead.
Yeah, sure. So yes, Phoenix, to its credit, has established a team to sort of try to mitigate the number of deaths, heat deaths. And so they are trying to use data to locate cooling centers in the right places. They're trying to keep them open 24 hours. I mean, unbelievably, last year, a lot of these cooling centers would close at night and close on Sundays. And so people were out of luck during those times, and a lot of deaths occurred during those times. So they're keeping those open longer. They're doing outreach to people to let them know where to go, to give them water, that sort of thing. But the problem is they have very little money. I mean, this team is a tiny team. They're also trying to do some urban engineering to plant a bunch of trees to make urban spaces cooler, that sort of thing. Because one of the problems when you have a city is not only does it get hot, but then you have the urban heat island effect. And so it's even hotter in a city and on that pavement. And so they're trying to, mitigate that. But the problem is they just don't have that much money. They're relying on actually COVID money from 2001, and that expires in 2026, which is kind of right around the corner. And Phoenix is not going to get any cooler in 2026. But by that time, they may be back to where they were pre-2021 when the cooling centers were just sort of in churches. Churches would open their basements and that sort of thing to let people in, but you had to sort of rely on that, and you could never know for sure where the next cooling center was going to be. If the church decided to close its basement for some reason, you would be stuck. And so it's a tough proposition right now for this heat team, because they may run out of money pretty soon for these projects.
Hey, Mark, one of the things that I was struck by when I was reading your column, I was thinking about the major chip companies that in recent years have announced their plans to build facilities in the Phoenix area, including TSMC and Intel as well. And I'm wondering why, we tend to think that markets are usually right. Markets sort of correct for these things. But the market's not really taking into account, at least from an economic development perspective, the risks that are associated with being in a place like Phoenix. Because if they were, then we wouldn't necessarily see the economic development happening in these areas, no?
Yeah. I mean, there's a lower upfront cost and cheaper labor, cheaper land, that sort of thing. But the two big issues are the water, which we haven't talked about at all, which is a whole other headache for Phoenix and a lot of these other places in the Southwest. And again, Arizona
NYMEX diesel June futures settle at $2.43 a gallon. NYMEX gasoline June futures settle at $2.46 a gallon.
At some point, it's fighting with Nevada, it's fighting with Colorado, it's fighting with California.
NYMEX WTI crude July futures settle at $79.23 a barrel. That's down 60 cents or 0.75%. And NYMEX natural gas June futures settle at $2.49.
It also takes a lot of power. If we want to get to the upside of this, Phoenix has anything, it has a lot of sunshine. So Phoenix could be a powerhouse of solar energy that could power all of these things. If you solve the water problem, then maybe you also could solve the not having enough air conditioning problem. And again, if the government has the money and the backing to protect its most vulnerable citizens, then you can have heat waves and you can have heat without having to have thousands of people die. And you can also have development and jobs and all of that stuff. But it takes a lot of a lot of planning and political will.
I have to say, there's two sick things that have come into my head. One is, I feel like the big investment play is power, whether it's because of the AI needs or whether it's just because the earth is getting hotter. I mean, I know I live in an area where when I grew up, just outside New York City, we didn't put the air conditioner on except for maybe a couple of weeks in late July. Now I literally go from spring to air conditioning. So I feel like this ultimate investment play of power, like again, AI, or just because Earth is getting so much warmer. But secondly, when I'm listening to you, Mark, I feel like we're going to have, we talk about food deserts, but I feel like they're going to be, viability or areas where people just can't live because there isn't water access or it's just too hot. I mean, am I being too dystopian? And forgive me, just got about 30 seconds left here.
Not dystopian at all. I mean, there's a thing called, we're just going to have controlled migration, controlled retreat, managed retreat from these areas. We talk about parts of Florida that get flooded off. Talk about parts of the desert outside of Phoenix that just don't have water. People have already retreated from some places, and they've already limited growth in some places outside of Phoenix. Wildfire zones in California. So this is a real thing that is actually happening now, and it's another thing we need to plan for in the future.
I feel like the planning list is getting a little crowded.
The list is long.
Yeah. Mark, thank you, though. I think always important in terms of what is going on, certainly with our climate, what's going on around the country, around the world, really. As you say, you finished this up saying it's a world issue. Bloomberg Opinion editor, Mark Ongloff joining us there. Hey, coming up, we're going to talk about that new class of weight loss drugs. There's an app if you can't find a drug.
All that and more. First up, though, we're checking the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Criminal charges against Scotty Scheffler have been dismissed. Scheffler was arrested and handcuffed in Louisville during that PGA championship. You may remember that. He was charged with a felony for assaulting a police officer with his vehicle, along with 3 misdemeanors. Scheffler had said that he simply misunderstood the commands coming from the traffic officers. Well, those charges were all dropped. Deputy Treasury Secretary Wally Adeyemo says Chinese firms have to stop supplying components that can be utilized by Russia in weapons used to attack Ukraine or face the consequences. He talked with Bloomberg from Kyiv.
We are concerned that Russia is getting access to key component parts, particularly from China and other countries, that are allowing them to build these weapons. And what I'm here to do in Kyiv is to talk to my counterparts about the new tools we're considering to try and go after the ability of the Kremlin to do just that.
Deputy Treasury Secretary Wally Adeyemo speaking with Bloomberg's Joe Matthew. Hamas probably won't be totally defeated for another 7 months, according to Israel's national security advisor, underscoring the difficulty the country is having in crushing Hamas in Gaza, telling a radio interview that it'll take 7 months to achieve what Israel considers destruction of the governmental and military capabilities of Hamas and the Islamic Jihad. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
The names that move markets are on Bloomberg.
You know, with all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. You know, look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time we have to constantly resurrect this spirit of resilience.
But are you hopeful that
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. The top names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks and bonds remain lower after the Fed's beige book report. Dow Industrials very close to session lows right now, down 407 points on the Dow. That is a drop of 1%. S&P down 33, decline there of 0.6%. The NASDAQ Composite Index down 71, a decline of 0.4%. 10-year yield at 4.61%, with a 2-year now yielding 4.97%. Spot gold is down 0.9%, 23.39 the ounce, while West Texas Intermediate crude down 0.9%, 79.14 a barrel. On a down day for stocks, 3 well-known retailers are surging today. Chewy, the pet food delivery service, pet product delivery service, rallying after earnings beat estimates. Chewy up now by 26.3%. Abercrombie & Fitch raising its full-year outlook after it blew past first quarter sales estimates. Abercrombie & Fitch down 26%. Also, Dick's Sporting Goods.
And Brent crude futures settle at $83.60 a barrel. That's down 62 cents or 0.74%.
S&P down 21, or actually right now a drop there just about 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, so we've stressed you out already about climate. Check, done that. We've also reported on the stressed out supply chain that is the new class of weight loss drugs. You know, Wegovy and Ozempic and others. So we've talked about that a lot, Tim.
Yeah, well, there's actually a free tool that can help with that stress. As reported today by Bloomberg's Madison Miller, the startup Row has created an online tracker, Carol, that helps patients and doctors find supply of these hard-to-get drugs.
All right, here to talk about it is Madison. She's Bloomberg News health reporter. She covers this space intensely here in our studio, along with Zach Ritano. He's co-founder and CEO at the health tech platform Ro, which handles everything from online diagnosis to the delivery of medication. Z joining us from Sarasota, Florida. Z, great to have you here. Madison's here in studio with Tim and myself. Z, let's start with the reaction.
Thanks for having me.
Yeah, great to have you here. Talk to us about reaction to the news launching the tracker today. Tell us what you've heard so far.
Yeah, thanks again for having me. Just zooming out for people to understand what the tracker does and why we built it in the first place is, as you said, we built it for patients to be able to report shortages, to give information in real time to the FDA about the real lived experience of patients on the ground, and provide the FDA with real-time information, and enable patients to crowdsource and find supply together. So a patient comes on and says, I need supply, and they'll enter in their zip code, the drug, and dose. And then if a patient comes on and says that they found supply, they'll enter in the specific pharmacy, and we will notify every patient within 100 miles of that pharmacy that is looking for that exact drug and dose match. We'll email them the pharmacy name, a link to the Google Maps, and the phone number to be able to call the pharmacy and transfer their supply. So again, really trying to help patients both report shortages as well as find supply and crowdsource it together. And then we also built a tool for providers to be able to report shortages just as well as patients, but also so that they have nuanced and real-time information when creating a treatment plan for their patients.
Okay.
Being able to see, yes, what's in shortage and what's not in real time, but also to be able to see, even if something is listed as available, but there's a lot of shortage reports that might influence their decision.
Okay, Z, I want to bring in Madison Muller, who, as everyone who watches and listens to us knows, covers this so closely. Madison, before you get to a question...
And does it very, very well.
She does. We agree. Before we get to a question for Z, I just want you to contextualize this for us, because you've reported a lot on the shortages and what patients have had to do in order to try to find these drugs. So give us some context there.
Yeah, right. As we know, I mean, and maybe people who are listening have experienced this, in the U.S., pharmacies don't report inventory. So it's really hard to know if a pharmacy has your medication, especially when a drug is in shortage, like Adderall, these weight loss drugs. The experience of patients has been that they're having to take time out of their work days to call sometimes dozens of pharmacies in their area to find a pharmacy that has supply of their drug, and that onus falls onto the patients. Some are driving hours, they're driving across state borders to find pharmacies that have these drugs. And so it's concerning for them. It causes anxiety. It also messes with the actual efficacy of their medications if they're not able to take it monthly at the same time, or weekly at the same time. And so it's a very stressful situation. The drug makers, Eli Lilly and Novo Nordisk, are investing billions to ramp up production, but it's just not happening quickly enough with how high the demand is right now.
Well, finish up, you reported on what Ro is up to. So go ahead and come on into the conversation.
Yeah,
and
definitely. Yeah, and Z, I know that you and I have talked about this a bit, but how did what was your inspiration from what you were actually seeing from patients on social media and the crowdsourcing that was happening, and sort of like the community helping each other to find these medications, and how did you take that and sort of use that as inspiration for this tracker?
Yeah, I mean, as we talked about, I think you described it really well, is we saw patients using social media, Facebook groups, Reddit subthreads, Twitter, Airtable and Excel sheets, and they were using these tools to try and accomplish the thing that this tracker does in a scaled, structured, and automated way across the country. So they were sharing with one another where they found supply, where they were calling pharmacies to try and help others, because it is. And Madison and I talked about this, is people with overweight and with obesity have been marginalized for years, if not decades. And so there's a tremendous amount of generosity and sort of shared experiences that the community has, and there's a willingness to lend a hand and help one another.
Right.
And as Madison said, zooming out, inventory management is a well-solved problem in other industries, right? You and I right now, we could go to Best Buy. I think you're in the studio in New York. You can go to Best Buy. And if you're looking for something, it'll tell you if it's in stock nearby, if it's available for pickup, if it's available today. how many are left in stock to give you some sense of urgency if there's one versus an infinite number. And this should exist in healthcare, right? It's a very typical, normal consumer experience. And as Madison alluded to, is that if that is disrupted, it makes it very challenging for patients to really realize the full efficacy of their treatment if there are disruptions. And every single month there's a hunt. And it's also not the best use of resources in the healthcare system for patients and providers to constantly call pharmacies and have a pharmacist always be on the phone just saying whether something's in stock or not.
And so this tool is just one of the things that you are doing to help address these shortages. And we've been talking on the show, we talked about Hims launching a compounded weight loss drug program, and that's something that Rose started doing earlier this year. So can you talk about like the different ways and the different options that you are giving patients who are experiencing these shortages?
Yeah, I think you, it's no surprise you hit the nail on the head. For us, it just comes back down to options. And providing as many as possible for patients. So we do have compounded options. We also have branded options. We also allow and facilitate insurance reimbursement, and we'll handle the entire prior authorization process for patients. We offer Ozempic, Wegovy, Zepbound, Saxenda, as well as compounded options. So again, whether someone's paying cash or branded, whether they're covered by insurance or not, we want to make sure that we are fighting for patients to get the most affordable, most efficacious product, given their personal health history as well as their insurance coverage.
Hey, Z, what's the profitable part or most profitable part of your business? Is it, prescribing the Ozempics and the Wegovys? Is it the cheaper versions? Is it helping locate drugs? Help us understand your business model.
Yeah, our business model is very, very simple. We're 100% direct to patient. And we have different subscription and membership services for patients. So they'll come on and they will tell us really what we talk about, what we're building at Rose, goal-oriented healthcare. So a patient will come on and tell us what they want to achieve. So they'll come on and say, I want to have a child, and we have fertility products and services. I want to have better sex, and we have products for sexual health. Or I want to lose weight, and we have obesity care centered around GLP-1s. And all of those are a simple subscription service, very similar to other subscription services that people have in their life. And what that does is it fully aligns us with the patient. Every single day we wake up and we have to earn. People don't part, as you well know, people don't part with their hard-earned money very easily. And so that is something that we've always prided ourselves on, which is we align ourselves with the patient. And if we deliver a really effective service and membership and help them achieve their health and life outcomes, then they stay with us.
Hey, yes or no, are people already using the tracker real quickly? Are you seeing an uptick?
They are. We've already seen well over 1,000 submissions of shortages and supplies. So we're encouraged by the reaction only in a short 5 or 6 hours since it launched this morning. And
so appreciate it. Hey Z, thank you so much. Z Reitano, the CEO at Roe, and of course our own Madison Moeller joining us in studio. Folks, you are listening and watching Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you...
I had actually run tech banking and took Google Public, so I had a little sneak preview.
Company news headlines on Bloomberg Radio.
On Bloomberg World Headquarters, I'm Charlie Pellet. Coming up after the close of trading, we will be hearing from Salesforce. Wall Street is expecting strong results from the company's data organization software to offset weaker sales growth among its other products. Salesforce shares ahead of earnings. They're up by about 0.5%. Jamie Dimon says he expects problems to emerge in private credit and warned that there could be, quote, hell to pay, particularly as retail clients gain access to the booming asset class. His comments came today at an industry conference. JP Morgan Chase shares, they are down by about 0.5%. BHP Group says it will not be making a firm offer for Anglo American before today's deadline, walking away for now from what would have been the biggest mining deal in over a decade. Shares of Anglo American, they're down by 5%. BHP Group lower now by about 0.2%. ConocoPhillips has agreed to acquire Marathon Oil in an all-stock deal, valuing the company at about $17 billion, extending a major buying spree among the largest players in the American oil and gas industry. ConocoPhillips down by just about 4%, 3.9% right now. Shares of Marathon, they are up by 7.7%. Shares in real estate project lender Bank OZK, the old Bank of the Ozarks, fell the most in 4 years after an analyst dealt the stock a double downgrade, citing concerns over a pair of its loans. City analyst Benjamin Gerlinger downgraded his recommendation on Bank OZK to sell from buy, while lowering his price target to $37 from $57. And those are some of our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. As jury deliberations continue in former President Donald Trump's criminal hush money trial in New York, President Biden is heading to a rally in Philadelphia. On board Air Force One, White House Press Secretary Karine Jean-Pierre did not say if the president would be paying any attention to the trial.
I think the president's going to be focused on the American people today.
The jury has to be unanimous to convict or acquit Trump on each count. China needs to stop supplying weapons components that Russia can use in Ukraine. That's according to Deputy Treasury Secretary Wally Adeyemo. He said as much as he meets with European allies, and he spoke to Bloomberg from Kyiv.
The United States and our allies and partners are going to be open to sanctioning any company or individuals that provide material support to Russia's military industrialized complex, because we want to make sure that Russia doesn't have access to the goods they need to fight the war they want here in Ukraine.
Deputy Treasury, or rather Yes, Deputy Treasury Secretary Wally Adeyemo heads next to Germany. He says the U.S. is looking to sharpen sanctions against Russia. Israel's military says it has now seized control of the entire length of Gaza's border with Egypt without elaborating. Capturing the strategic corridor signals that Israel has deepened its offensive in southern Gaza. Palestinians in the border city of Rafah reporting heavy fighting. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovic.
Amy Morris, thank you so much. Amy Morris there in the nation's capital. Speaking of that, she and everybody who's living in and around the D.C. area, they are getting 2 new residents.
We're talking about 2 pandas. They're returning to Washington's National Zoo. It's the latest sign that China's reversing course after, remember a few months ago when it took back all the bears on a loan to the U.S. So the big question, Carol, a return to panda diplomacy.
Oh my God, we're showing pictures of baby pandas, which make it so cute. Bao Li and Qing Bao are the 2 names. They're 2 years old. They're going to be on loan through April 2034. It's all part of research and breeding agreement between the United States and China. Both pandas and any of their offspring will remain the property, though, of China.
Okay, so it turns out that one of the pandas actually going to the zoo is the offspring of one of the pandas that was from the zoo. So originally,
is that
so there's
everybody
like
in the control room?
Yeah, they're all
looking
like
at the
saying how
pandas?
cute these pandas are.
It's really funny. Grown people, grown adults, and pandas.
Bao Li, the male panda included in the latest loan to Washington, has roots in the city. His mother, Bao Bao, was born at the National Zoo back in 2013.
I have to say, one of the highlights, taking my daughter actually to the Washington Zoo when she was younger and going to see the pandas, and it was pretty cool stuff.
You should see our chat right now. Everybody's freaking out about these pandas. People love the pandas. It's why they're a big deal. It's in fact, our team in Washington, D.C. who covered this spoke to a former White House and CIA expert on China and now at Georgetown who talked about the seriousness of panda diplomacy. Dennis Wilder said that China played a rather cynical game when it took the pandas away from all American zoos without a willingness to negotiate new agreements. He continued that the turnaround in Chinese policy demonstrates that Beijing knows it must find ways to reach the American people in a more positive vein.
I think what's interesting is we, often on a daily basis have stories about the stress and tension between the United States and China. To see this, you've got to think, okay, they obviously have communication channels and they're talking about things and coming to agreement on things, and that maybe ultimately it isn't so bad.
Can we get some pandas sent to the Bronx Zoo? A little closer to home for us. We can go visit them.
We'll work on it.
All right.
You can call up, I don't know, call up the White House.
Yeah, okay, I'll do that.
All right, that is our one more thing on this Wednesday. Folks, for those who are watching on television, the close is coming your way in just a moment. For those staying with Tim and me, we're going to talk about airline stocks. American Airlines really taking a big hit today. We're going to get into the reasons why. That's coming up, and as well as gambling at Dave & Buster's.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
The Treasury fails to win over bond investors, but retailers finding a way to win over that skittish consumer. Live from Studio One here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. Who knew that Abercrombie & Fitch could rise from the graveyard of retail? We'll get to that in the show. All right, here's where we are in markets, Romaine. It's a pretty simple one. Sell everything, buy the dollar, sell tech the least. That's pretty much the broad strokes for you. The S&P is lower, you got tech is lower, you got bonds are lower, yields are up, and the dollar is at a 2-week high. And that just sort of sets up the tone, I think, Romaine, for that market.
Yeah, and let's talk about that tone in the market, because we saw that two-day uptick in Treasury yields. And Alex, that's led to a second day of softness for equity prices, and you can really blame it all on a trio of tepid U.S. government bond auctions. The demand to hold Treasuries on a price base is just not there at current yields, as a lot of folks lacking confidence right now that prices can appreciate much further without the Fed, of course, helping on that ride. We saw that sentiment in full yesterday with the week showing for 2-year and 5-year note sales, and we saw that just 2 hours ago today in an even weaker auction for 7-year notes. Now, the dour bond market sentiment is feeding into an equity market that was already in the doldrums. Some shock commentary this morning by United Health about pressure in its Medicaid business, sending health insurers lower, and a shock warning from American Airlines about domestic travel this summer being worse than expected. American Airlines, that's your biggest percent decliner in the S&P, and United Health, that's your single biggest point drag. Now, one modest bright spot out there, though, is in the retail space. Some decent earnings out of Dick's Sporting, as well as Abercrombie & Fitch before the bell, potentially providing a nice setup for Capri, which reports after the close. A conversation in just a bit with Abercrombie's CEO, Fran Horowitz, for some insight into how retailers are trying to win over an increasingly skittish consumer. Alex?
Yeah, even I'm paring back my shopping. That feels like a big moment. Back to your top story, Roman. I want to take a look at the 7-year auction, and this is one example of how to look at it. This is the bid to cover ratio, right? The lower it is, the weaker the demand is, the higher it is, the stronger the demand is. And you can see the bid to cover ratio is at a 1-year low. The buyers just didn't show up. They needed more concession. They needed higher rates, and that follows the 2 and the 5 years. So the question really is this a statement about supply and how investors feel about the bond market and the supply, or is this just straight up repositioning in the market?
Well, we're going to get that question answered by our first guest, Jerome Schneider, joining us right now to help us kick us off to the close, Managing Director and Head of Short-Term Portfolio Management and Funding over at PIMCO here in New York, I should say. Jerome, great to see you here. And how are you feeling right now about the bond market?
Good afternoon. And we're feeling quite positive about the bond market. You know, there's a certain sense of rationality to what we've witnessed over the past few trading sessions with the bond auctions, with the understanding of where risk appetite is going. We've had a lot of the volatility taken out of the market, both from a Federal Reserve, a monetary policy perspective, as well as a risk appetite perspective. And it's not necessarily a go away in May and manage your risk accordingly, but it's one where people are slowly beginning to adapt to a higher interest rate environment. And in that construct, that higher interest rate environment fundamentally means that you're going to have to accept higher, bigger, longer bond auctions, accept a term premium moving from negative term premiums, meaning the amount you pay further out the curve, to something more rational. And what we're simply witnessing over the past few sessions, number one, is a slow but methodical process to understand what that term premium should be. But also, we've done pretty much a round trip in terms of yields over the past month, specifically in the front end. And so putting a context around this discussion, perhaps it's simply that the Federal Reserve has a much steadier hand in expecting the outcome than the market at this point in time. So the market's probably more data dependent simply than the Fed.
Okay, Jay Powell thanks you for that compliment because I think he's been looking for some sort of affirmation for a while. I do want to get your knee-jerk reaction, though, to the auctions that we've had this week. And I know 3 auctions in 2 days doesn't necessarily make a trend here. Right. But when you consider how tepid some of the demand has been, is that a harbinger of more to come? Or is this just kind of that wait and see until we get more movement by the Fed, or at least more communication by the Fed, people will feel more comfortable with some of these durations?
Perhaps it's simply just a recalibration, not necessarily only of supply, but the triumvirate of outcomes, growth, inflation, as well as supply. And if you think that the inflation prognostics are going to be a little bit longer, then perhaps you actually want a little bit more term premium out the curve. And then when you combine that with where risk appetite is, with tight credit spreads, relatively speaking, equity risk premiums, obviously, in the higher echelons of historical realms, this puts you into a situation where a rationalization of what you should be paid both in nominal terms and real terms should be probably a little bit higher than we are today. But that being said, again, going back to the focus on volatility within the broader marketplace, when you look at where fixed income is today and when you see where the 10-year note and the 2-year note is at this point in time, from a real return perspective and a forward-looking real return perspective where you have the 5-year forward rate expectations still above 2% at this point in time, fixed income actually offers a really compelling opportunity over the secular horizon. And taking that into context with regard to that we're probably going to have a little bit more volatility within the broader marketplace over that same time frame means that you should probably be allocating a little bit more to those income-producing assets as opposed to banking on capital appreciation.
And where is the risk-free rate in that? Like, it used to be the 10-year. Is it still?
Not necessarily that the 10-year is the risk-free rate per se, and honestly the market is very bifurcated in that. If you're a real estate investor, the 10-year note is going to be very focused, but really what people are focusing on is the overall rate regime moving from 0 or near 0 interest rates and globally to a higher interest rate environment. That simply means that we have to be thinking about what the expected returns are across all asset classes at this point in time. So this rationalization, what we're looking at the microscopic view of 3 auctions and saying, oh, here's the beginning of a trend, it might be, but the reality is that the calibration toward
toward where we are headed has more to do with the digestion of high real rates and high relative rates here in the near term versus what we've been accustomed to over the past 5 to 10 years. And that's going to take some time in order to avoid indigestion. And frankly, this is, again, a very rational expectation for the market to be having at this point in time.
Just basically means that what I'm hearing is it's just going to be range bound. And it might be a wide range, right? But it is going to be range bound. We're going to see some volatility around there. What's the best way to play that?
So that's exactly right, is that there will be probably more volatility in a relative sense than we've been accustomed to in the past, simply because the Federal Reserve is sitting a bit back and sort of assessing the landscape for inflation a little bit longer than the market had expected. But in that context, what it simply means is you want to be weighing and leaning into asset classes that are going to have a little bit more resiliency, high-quality asset-backed securities, even stepping out of those cash domains that people have found for a very long point in time is attractive. Because we know we're going to be at this higher rate environment for a longer period of time, begin to sequence out of your traditional cash products like Treasury bills and move into the front end of the yield curve to get those 6 to 7% returns in those high quality assets.
Why do you think people are so reticent to do that right now?
Well, number one, originally it was because they were expecting rate cuts along the way. Yeah. Secondly, when they think about risk-taking, there's still a relative concern about where are we in the cycle? Where is risk-taking going to land? Is it a hard landing? Is it a no-landing situation? And I think really what fixed income offers is sort of a look-through to get to the other side without being very decisive about what that landing zone is. So contextualizing, higher rates are probably here for longer, we believe that. Mm-hmm. And at the same time, while there may not necessarily be a rate hike on this in the near term, the reality is rate cuts probably are pushed out a little bit further. So contextualize your allocations to adapt to and embrace those higher income derivatives in those sense and move to fixed income in that guise. And so it provides a smoother landing compared to a smoother landing zone compared to the equity returns. Yeah. And frankly removes that uncertainty or effectively the need to bet on a growth outcome over the secular horizon.
This may be a dumb question, but for those folks who are trying to count on rate cuts at some point in the future here, everyone's looking right now at that 2% target and saying that until the Fed gets there or close enough to it, we're not going to see those cuts. You know, there's also a big argument out there that the Fed may actually be willing. They may not want to say it out loud, but they may be willing to accept the fact that we're going to be above 2%, right, and they can live with that.
Well, you're going to get a hint of that in the June summary of economic projections, the dots, if you will. And it's probably going to put the PCE at a little bit higher number, closer to 3% than the previous dots back in March. So that's your first hint of where the Fed thinks longer-term inflation is going to head. Secondly, there might be a discussion being more formal or informal discussion being had at Jackson Hole in later summer, and that's a great forum for them to begin to plant some seeds, see where that ends, so that maybe the R-star, the neutral rate, isn't as low, which, while quantitative and sort of wonky to think about from an economist's point of view, from a practical point of view, if I just said to you, hey, inflation's going to be higher over the next 10 years than you thought it was going to be in the past, your expectations of return should be very, very different. And when you do that analysis, whether you're a retail investor or an institutional investor, you begin to want to gravitate toward those asset classes that are producing real inflation-adjusted returns after the fact. And that's where fixed income becomes that focal point over that horizon. So that's a very real conversation and not a dumb question. It's something that investors should be focusing on in that longer-term discussion.
All right, Jerome. Well, you always give smart answers to everything we throw at you. Jerome Schneider, Managing Director and Head of Short-Term Portfolio Management and Funding over at PIMCO, helping us kick you off to the close. Coming up in just a bit, a closer look at Abercrombie & Fitch coming off an earnings report. 6 straight quarters now of revenue growth. This is the turnaround. We're going to ask the CEO, Fran Horowitz, about that in just a second.
All right, plus what's driving all the big deals in the oil sector? The latest, ConocoPhillips acquiring Marathon Oil in an all-stock deal that values the company about $17 billion.
And an interesting ride today for health insurance stocks. A ride down under pressure after United Health issues a warning about Medicaid enrollment. It's our stock of the hour, and it's coming up in a bit right here on The Close on Bloomberg.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Continuing coverage today on Bloomberg Television. Context changes everything.
Gazprom's gas output fell to 355.23 BCM in 2023, according to Interfax.
The energy industry is heating up. ConocoPhillips said to be going to be acquiring Marathon Oil in an all-stock deal that values the company at about $17 billion. Now, this move, it's going to expand ConocoPhillips's footprint in domestic shale fields from Texas to North Dakota, while at the same time adding to the company's Permian expansion. It's the latest wave of mega deals that we've been seeing in this space as producers are looking for new drilling sites. Alex, you know, we were going to get a guest for this, but we really no one better person to talk about this with than you here. I am trying to figure out, though, because, I mean, I kind of understand, I guess, the Permian because they're there, but explain some of the Texas and North Dakota shale. Is this a net benefit for them to go into this space through acquisition?
So a couple of things. So they do expand their Permian footprint, but they also expand their Eagle Ford and Bakken footprint as well. They were already in those areas, but this helps expand it. And overall, analysts have been kind of asking the question throughout the day, does this make Conoco bigger or better? And it doesn't seem to me that analysts have the answer to that yet. Is it just like straight up bigger? You're just going to get more inventory, therefore bye-bye? Or does it make you more efficient? Does it make you more capital efficient, et cetera? Something that they're going to be doing a lot in the Bakken and the Eagle Ford is they're going to be refracking. Yeah. So they already fracked those wells, or I guess Marathon Oil did, and they're going to go back in and do it again with different kind of technology to get more oil out of the ground. And the question is, like, is that better, or is it just bigger?
And is that cost effective too? I'm curious about scale, though, because when we talk about all the acquisitions that we've seen, and this gets to whether this is just bigger is better or is better better. What does scale offer these companies, particularly of a company that's already, let's face it, a behemoth in ConocoPhillips?
Totally, and that's such a great question. You can see it in all the big deals that we've seen, right? I think at the heart of it is that if you're an investor and you're a portfolio manager, you can't own a lot of oil stocks. This is not an environment where you can do that. So you're going to have to pick the creme de la creme to be that. So there can't be a bazillion oil companies all vying for that dollar from you to do that. So they're kind of forced to be the one out there who's going to make the big bet to say, look, this is now our market cap, this is now our juicy dividend and buyback, and this is our production growth. Pick me, don't pick my peer. And I think at the heart of it, that's really sort of the issue. In addition to like, I want inventory, I want a long lifespan, blah, blah, blah.
Yeah, so let's take the flip side of this, and that's Marathon Oil. I mean, other than the $17 billion that they're getting into their bank account, what are they really getting out of this? Why cash out now?
Lee Tillman can be like, look at my awesome deal.
Yeah.
It's also been in play. I mean, we reported from Bloomberg that Devon was also interested in buying it. And that they were one of the sort of handful that were sort of floated around as deals to be done. You had Crown Stock was one that was already bought. Endeavor already bought. Mewborn, private, not bought, but that's kind of the big one left. There's a couple other ones too. And then not forget, there's like 400 private players, like small mom and pop guys at the end of the day, right? What did they do? Like, do they just unite together? Do they wait to be scooped up by a big guy. And then there's the medium size, like an EOG and a Diamondback. They're not as big as Conoco, right?
Yeah.
But there are still really big players. What happens to them?
No regulatory issues?
Oh, there'll be regulatory issues, most likely,
There will be?
Well,
With this administration or the next one?
Oh, that's a good question. Bloomberg Intelligence says that there will be FTC issues. Obviously, Conoco said this is a clean deal, no issues whatsoever. But they overlap on a lot of different basins, so clearly there's going to be that review in there.
All right, well, this is a behemoth of a deal, $17 billion Marathon, going under the umbrella of ConocoPhillips, pending, of course, shareholder approval and, of course, regulatory approval as well. All right, coming up here on the program, we're going to take a closer look at American Airlines because they really did rattle the cage this morning, offering some updated guidance, I should say, after the bell last night, and that's dragging all of its peers lower today. The big question is, are investors overreacting, or does this signal something larger for the airline sector? That's coming up in a second, right here on The Close on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people. It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Let's get a view from the sell side with our top calls. The big movers on the back of analyst recommendations, and we start off with Dell Technologies. Bank of America lifting its price target today to 180 from 130. The analysts really positive right now, given AI server demand, increased needs for storage, and what he says is an expected PC refresh in the months ahead. Shares of Dell having a decent day, up about 5%. Not having a good day is Bank OZK. Next in line with a double downgrade to sell from buy over at Citi because of two major real estate projects the bank has extended credit for. Now, the analyst highlights substantial concerns about a multi-use project in Atlanta and a life sciences development in San Diego. He calls the strategy with regards to those properties idiosyncratic and flags the bank's tightening capital levels. Those shares today having their worst day since the onset of the pandemic all the way back in 2020. And finally, let's take a look at American Airlines. Jefferies downgrading to hold from buy. The analyst over there, Sheila Kaialou, says it's clear American's long-term strategy will take some time to execute, especially after slashing its profit and revenue outlook for the second quarter. She sees sales lagging peers for the rest of the year, given the tougher than expected industry capacity for short-haul flights. American Airlines shares down almost 15% here on the day, its worst day also, going back to 2020. And those are some of our top calls. We do want to stay on this story because it is having ramifications, and it's raising a lot of questions as to whether what's ailing American Airlines is an industry-wide problem or just specific to that company. Sheila Kayalu joining us right now, Managing Director and Senior Equity Research Analyst covering the airline sector for Jefferies. So let's start there, Sheila. Is this something that American Airlines investors should be concerned about, or is this something that investors in all domestic carriers should be worried about?
Sure. We think airlines continue to be the haves and the have-nots. We upgraded American right after the Alaska incident with Boeing on the fact that American didn't need additional airplanes to grow its business, and it could potentially outperform on even with a price discount to United and Delta. But we started having thesis drift at the March Analyst Day when we didn't find a good revenue framework, and clearly, the story has gone awry with the chief commercial officer leaving. And what's happening is in 75% of Americans' markets, which are short-haul domestic, they're seeing pricing degradation because they're competing against the low-cost carriers like Southwest, where we have a sell rating on, and JetBlue, and there's a lot of capacity coming into those markets.
Well, this is what I was curious about because I saw the CEO's comments and the whole price degradation thing, but isn't that also a self-own on their part? Because I felt like they've been so aggressive on pricing. And did they just misread the room? I mean, what happened there?
There's a little bit of forecasting error. At least that's what United is calling, which we upgraded, saying that they're not seeing any price weakness. And that's why, the airline group as a whole is down today because investors are worried that the consumer is cracking. We don't think that's the case. We continue to think that premium pricing is expanding, and internationally it's expanding. But we think in short-haul markets in the U.S., regional flights, the pricing is just cracking because they have too much competition from carriers that are losing money, like Spirit Airlines or Southwest. And so they're coming in and pricing down, and Americans having to compete with that. And that's where most of their capacity is going into.
So why did they do that? How did they go so wrong?
Yeah, we can't figure that out. I mean, I flew to San Francisco last week, and my flight on American First was essentially the price of the Delta middle class seat. So our whole thesis was that American could secure some of that pricing gap between Delta and United, but I think the other end of the market really softened for them, whether that was the Florida markets, the Caribbean markets. As U.S. domestic demand leisure leveled out, there was too much capacity at the end of the day, and more troubled carriers tend to be in those markets.
So at the end of the day, you got to take capacity out, right? Like, how long does it take to sort of right that ship?
Well, is it a bigger issue with American? And that's what's coming into question, and that's why the shares are down 15% today. Is their entire strategy flawed, where they were putting too much capacity into the U.S. Sunbelt? They were also changing the way they sell to the corporate markets. So did they end up losing corporate share? There's a whole host of problems that are coming up to question. But one good thing is they're managing on the cost side, but on the pricing side, they're down 5%. They're underperforming Delta and United by a significant margin.
Well, then that gets to the question. I think the last few times we've had you on, all the talk has really been about capacity, obviously the Boeing and delivery issues, and to a certain extent, the cost structure here. Are those at least more at an equilibrium, or at least getting to an equilibrium? I'm just trying to look for any sort of bright spot or silver lining here for investors that they can look to.
They're managing costs really well. They've done that really well, and I give them credit. However, because we're cutting our EPS forecast by 40% this year, it is also cutting our free cash flow estimate. That means they can't delever, and they'll probably have to take new planes in 2026 and beyond. So it kind of puts a pause on the entire thesis, and that's why we decided to downgrade it last night.
What's your favorite airline right now?
Continues to be Delta on the premium pricing trend, but United, given its international exposure, is 40%. International prices are continuing to stay up, and they're keeping that momentum. And I would say the management team at United is very focused on being shareholder friendly, and that's a differentiated point of view.
Yeah, because everyone went over to see Taylor Swift in Europe, so that really probably
helped. There you go.
All right, Sheila, thanks a lot. Really appreciate it. Sheila Kayalu over at Jefferies, thank you. So here's what I do. When I'm in the TSA line and I'm waiting to go through security, I get on my phone and I pre-order my Starbucks at the Starbucks so I don't have to wait online for 25 minutes. Not everyone is like me, though, because apparently, did you see this? Starbucks workers customers are really upset about being short-staffed. They say that your latte could take longer than usual because of an algorithm that Starbucks uses to allocate store labor. And they did a survey and found that at some areas you could wait as much as 30 minutes for your Starbucks.
I laugh this, and you know, this is where I get to be smug because, you know, I don't drink coffee. So it's like, you know, I don't know why anybody would stand there for 30 minutes waiting for a coffee. Are there no other coffee shops around?
Once you get used to your taste and your flavor, that just is going to be your taste and your flavor.
Because I'm just saying, I mean, you know, in New York City, I mean, you could throw a rock and hit a coffee shop, even in the airport, right?
Okay,
Pete's,
if my option is going to be like the Rando Deli where I like have one coffee, or I can go to Starbucks.
You're such a snob.
I need my venti Americano half calf almond milk.
So I'm not going to see you like on the Grand Concourse, you know, shaking up your little Greek cup of coffee and sugar on the corner.
No, I'm
right.
not. I used to do that, but you know, I had to change my.
I thought you were a real New Yorker.
I am a real New Yorker. I like Starbucks. All right, coming up. Speaking of stocks on the move, we're going to talk to Fran Horwitz, CEO of Abercrombie & Fitch. Her take on the retailer's strong sales and rising stock price. Analysts super positive and continue to say they could keep delivering. Can they continue to do that and deliver these kind of numbers? This is The Close on Bloomberg.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company, but I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostic.
And I'm Alex Steele, and yes, it is a down market, but there are some real pockets of strength remain, particularly shockingly in some retail sectors like Abercrombie & Fitch and Dick's Sporting Goods, also really crushing it.
Yeah, apparently people be shopping. You've been shopping?
I have not been shopping.
Oh, okay.
I'm
someone has.
Strict, and I'm on a budget, but the amazing part about these two companies, for example, they're limiting their promotional activities, so their margins actually got better. I only shop at places that have sales.
Yeah, okay. Well, you're going to disappoint our next guest.
I am.
But I think, but it gets to a point, though, too, though. There are certain retailers that have that kind of pricing power. They don't need to offer those gigantic discounts to get you in the door. But, you know, some would actually argue, some of the companies you mentioned, even like Abercrombie, even like a Dick's, that's not always discretionary for a lot of folks, particularly if you're buying for your kids, you know?
Exactly.
If you know, my son, I don't know, I don't know if you know this now, but all the kids today, they're all wearing the stuff that apparently I wore as a kid. So now I just wish I had saved all my sort of wide flared pants and all this other stuff, because apparently that's all back in style.
From the 60s, is that?
It's the 60s, yes, I'm that old. But,
cool.
The point is, or you can just buy them brand new at
I mean, I threw out my bodysuits and blazers, and now they're back in, so there's that too. All right, let's get to that point, because shares of Abercrombie & Fitch are just absolutely soaring today. The retailer raising its full-year outlook after blowing past first quarter sales estimates. The retailer now expects net growth to rise around 10% for the year. That's up from previous estimates of 4 to 6%. Joining us now is Fran Horowitz, the CEO of Abercrombie & Fitch. Fran, it's great to get this perspective from you. What drove your killer year? I mean, you've just been delivering quarter after quarter. Can you pinpoint one or two things that have really helped drive it for you?
Sure. So to your point, coming off of a defining year for us in 2023 and then taking that momentum right into the first quarter and having a record quarter, just an incredibly exciting day today here on campus. What drove that are a couple of things. I think most importantly, our formula of staying close to the customer and really understanding what their lifestyle is and what they're looking for is key to our success. That accompanied with a lean inventory and this chase model that we have created that helps us make sure that we're listening, we're testing, we're learning, and we're reacting to the business in real time is really helping us drive these results.
We had a great line in our Bloomberg piece that said, you extended your bounce back from the teen fashion graveyard. And I thought that was a really good image. And analysts responding to your quarter are asking the question, how long can you keep up this extraordinarily strong pace of growth? What do you think?
Well, the exciting thing is that we've actually separated the brands. If you go back through the history, Hollister is truly the iconic global teen brand, and we've been able to really age up Abercrombie. We've expanded the addressable market. I mean, the consumer now starts with Abercrombie when they're in their early 20s. They stay with us well through their 40s. And additionally, we've just completely grown all the categories, no longer being a jeans and t-shirt company, but carrying for all their different lifestyles. It's truly a lifestyle brand, sorry, as I was trying to explain. Today, they come to us for all sorts of occasions, from their wedding parties to their bachelorette parties to where to work to going out on the weekends. So the addressable market, as well as the range of what we offer, is much greater than what it used to be.
Fran, I want to talk a little bit about pricing and pricing power, if you will.
Sure.
I know the discounting has always been an issue for retailers. You've held the line, at least for the last couple of years, on that here, kind of limiting those discounts in a way that certainly helped the bottom line. Do you have confidence that you can continue to limit those discounts?
I mean, I'm so proud of the progress that we've been able to make. If you think about the AUR that we have been able to grow since 2019 in both brands, double digit, is done by twofold. One is through reducing our promotions, right? This discount to ticket for us used to be 30, 40, 50%. Today, it makes the customer happy at 15 or 20%. As well as making sure that the inventory is lean. And that's really the other key piece to it. So making sure that they buy it when they see it. It may not be there the next time that they come into the store. So our expectation every season is to come in with basically, I guess I would call it flat promotions to the prior year. And then the customer really tells us, you know, what their appetite is, and we can flex our muscle every week and make those decisions.
As you sort of try to, though, you have to, of course, stay ahead of the trends to a certain extent in order to sort of make sure you have the right inventory for those folks when they come into the store. Has that gotten more complicated, or have you found ways to make that process a little bit more efficient, or at least a little bit more reliable?
Great question. Yeah, I would tell you that with both the digital business as well as the in-store business, we can test our product pretty efficiently today. And then the key is being ready with your supply chain and making sure that it's agile enough that you have your fabrics ready and that you can get the product in on a very quick basis.
When you take a look, Fran, at the overall consumer appetite, we keep seeing lots of different signals that the consumer is slowing down. Are you noticing any of that? And if you had to predict out the next 12 months, how would you describe your consumer?
Yeah, Alex, I guess my answer to that would be if you look at the results for 23 and you look at the results for the first quarter, clearly that's not what we're seeing from our consumer. I think the key is if you offer the consumer the right product, the right fashion component at the right value, they are responding. I mean, the customers in any economic time have a choice on where to shop, and they are choosing us, and that is true in Hollister as well.
Are you noticing how they're paying at all? Like, I know you do the buy now, pay later stuff. Like, are we seeing any more sort of on credit? Are there delinquencies on that, or delayed payment, or buy now, pay later? Any other read-through I can get?
No, there's been no change to any of that payment.
That's really amazing.
And what about expansion going forward, Fran? I mean, what are you at, around like 750 stores? Are you planning to increase that count?
Yeah, we have an opportunity both domestically as well as internationally to continue to grow our store base. In 2023, we opened up 65 new experiences around the world. We'll open up about 125 this year. You know, the opportunity for us is to gain back a lot of share internationally. We've been on quite a tear in North America for the past few years, and just starting to see our playbook, you know, exported internationally and really starting to work there as well.
Where internationally? Because, I mean, this is still a company that's the lion's share of its sales here in the U.S. and North America. Where internationally are the best opportunities?
I would tell you that in the EMEA region, the UK and Germany are our two biggest countries outside of the U.S. That is where we're currently focused. We've built a team in London that's helping us localize our assortments and localize our promotions and make sure that we deliver our product appropriately from a calendar and a customer wearing perspective.
All right, Fran, well, we really appreciate you taking time to be with us today. Fran Horowitz there, the CEO of Abercrombie & Fitch, coming off of its first quarter earnings report here, and some pretty decent numbers, 21% comp sales growth, Alex, and of course the guidance that they gave going forward, also pleasing investors. You see that in the share price of 24% on the day.
Yeah, American Eagle also reporting after the closing bell, so that's going to be quite interesting. That stock has also had a really nice run in the last year as well. It does feel like if you have a targeted group, you're good.
Yeah, it'll be interesting. I mean, then you have a company like Capri, which is kind of its own story, also reporting tonight, and then tomorrow I think you get, what, like Nordstrom. A Birkenstock and Nordstrom. So it's kind of funny because we lump all these retailers all into the same basket, but I think as we saw you with Abercrombie & Fitch, and you mentioned American Eagle, these are really, a lot of them really are idiosyncratic stories.
Which is so interesting because I feel like just even a few years ago, these companies in essence would have been left for dead, as in like, no teen's going to want to go spend that much money, forget it, no way, it's going to be the Targets, it's the Walmarts of the world, and now that, and then it's come back. It's like a cyclical industry in essence.
The one thing I didn't get to ask is how much Abercrombie do you have in your closet right now?
None.
None?
None.
All right. Well,
no.
All right. Well,
I'm
we got
too old for them.
Okay. No, she said it's aging up. Alex, we got. I guess we're gonna have to take a field trip after the show. Before we get there, though, we're gonna take a look at some of the other big stocks moving today, and let's take a look at the health insurers. A down day after United Health says it's anxious about a disturbance in the Medicaid cycle. It's our stock of the hour, and it's coming up next, right here on The Close on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, time now for our stock of the hour. A closer look at United Health, dragging its health insurer peers lower after making comments about an upcoming disturbance to its Medicaid business. Abigail Doolittle joining us right now to talk a little bit more about this disturbance in the force. Now, we don't have to get too into the weeds of these sort of Medicaid reimbursements, but give us the broad strokes here of what United Health's concern is.
Well, what's interesting to me here is that this oddly reminds me of Celsius yesterday because it's almost a matter of expectation. So we have to step back to the pandemic. So in the pandemic emergency, Medicaid, nobody could be turned down for Medicaid. Right. Basically, no low-income person or disabled person. Then last year, that came to an end. So since that time period, 20 million people have been basically turned away. That's 90% of the states basically deciding who gets to stay, who gets to not stay. We knew that in April, so that's the bad news. There's only another 10%. But today, folks, the CEO came out with this comment, and it seems like there was just a little bit of an overreaction. And the reason I say that, similar to Celsius, the stock was up in a huge way. Out of the April low, it was up more than 20%, and then you have this bad news. Again, this news was essentially
One thing, though, that jumped out at his comments was the idea of how long it would take to sort of course correct. Right, this idea.
But that's not I don't think that's necessarily new, based on my understanding. In terms of because when you think about an insurer's revenue line, it's the number of members times the premium. So they already knew that they had lost 20 million people for Medicaid. Plus, some of those folks go back into Medicaid. The states will relook at the case by case and potentially put some of them back into it. But yes, I agree that.
Okay, so his comments though specifically about this idea of sort of it being kind of a multi-quarter cycle to get back to normal. We're talking about a flat fee that they get. So if they lose a customer, that's basically lost money. Yet they're still saddled with the extra costs. And Alex, I think the one thing that seemed alarming to me, I mean, even though a lot of this might have been known, was this idea of him articulating that he didn't really seem to see a light at the end of the tunnel.
Multi-quarter cycle for states to basically wind up ponying up the premium to cover everything.
Well, I think something else interesting to take a look at here is if you look at the analysts covering this stock, not surprisingly, mostly buys because they're a big banking company. They have a ton of debt to redo. But so the sell side is really pretty bullish on the story, but the buy side, I think, is less bullish. So I think that there's that tension there also in terms of there's negative sentiment for the space, because there's, of course, the Medicaid issues that we were talking about a few months ago.
Right, are they different?
They are very different. So the Medicare is exactly what we're talking about, what you and Romaine are talking about, whereas the Medicaid, those are for people, that's reimbursement for people above 65 and also affected by the pandemic. Coming out of the pandemic, all of a sudden there were a lot of people who needed more procedures. The reimbursement rate was low, so there's another hit to revenue. I mean, the funny thing about this stock, if you look at it, in some ways it's a trading stock. It's basically traded between 440 and 540 over the last year. You would never think that you would have these kind of swings on such a big insurer, but that's the case. But at the end of the day, this year, revenue growth is expected to be 7.3% versus 15% the previous year and 13%. So there's a bit of a decline here. It just seems as though there's a meeting of expectations, and yes, Romain, to your point, a bit of a hole in terms of what is exactly ahead. How will this be worked through?
Yeah. All right, Abigail, thanks a lot. Really appreciate that. Abigail Doolittle joining us on Stock of the Hour at United Health, and that really brought down like Centene, Humana, Elements Health, Molina. Yeah,
they're all being dragged down by this, and I don't really understand. You know, I mean, look, he was giving guidance more or less, right? So like when he says, look, this is going to be several quarters before we work this out here, I feel like the interpretation of this is going to affect the bottom line, or at least it's going to affect the top line, and in theory, the bottom line as well.
Yeah, and sort of where that winds up shaking out. Like, and is a few quarters. What is a few quarters? I don't know.
I don't know.
Is it a year?
I don't know.
Is it 6? Is it 8?
I mean, a few could be 3. A few could be 8.
Are you relying on states to pay you money? Because I don't know what that's going to do.
Have you talked to some of these states? Some of them are crazy.
I have not talked to the states.
Okay. Not this state. We love this state.
I think Romain has. Not Illinois, where he's from. All right, coming up, we're going to count you down to the closing bells. Nancy Tangler, CEO and CIO of our Laffer Tangler, will be joining us. This is Bloomberg.
Emily, welcome to YouTube.
On the next episode of The Circuit, how YouTube became bigger than Netflix.
You know, YouTube's really kind of its own sort of unique thing. We're really still in the early days of our growth story and fulfilling what our mission is, which is to give everyone a voice and show them the world.
Watch new episodes of The Circuit on Bloomberg Originals.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24
Looking now to the market on close imbalance, so the S&P 500, 430 million to the sell side.
NASDAQ 100, 195 million to the buy side. The Dow 30 is 45 million to sell, while the Mag 7 stocks are seeing 67 million to the buy side.
This is the countdown to the close. I'm Romain Bostic alongside Alex Steele with about 10 minutes until we get to the closing bells. And yesterday, Alex, we were talking about a market that was kind of, inching towards record highs, trying to stay in the green. Nothing like that today. Everything in the red, too.
Nope, sell stuff. That's pretty much how that's working out. I'm looking at energy, the worst performing sector in the S&P. Part of that's going to be Conoco, but it's also dragging down a lot of its peers. Of course, Conoco looking to buy Marathon Oil. But less bad is tech. I mean, tech within the S&P is only down 0.2%. You could look at the NASDAQ and the NASDAQ 100. So again, many people don't think that tech is a safe haven play, but on days like this, they tend to underperform less. Go figure.
Yeah, and this gets us back to the question of sort of what the next catalyst is with earnings season pretty much over, more or less here, and the Fed still a week away from making any sort of decision or communication. It's leaving a lot of people left to their own devices. A little bit earlier, we did catch up with Jerome Schneider over at PIMCO, who made his case for investing in fixed income during the uncertain rate environment.
There's still a relative concern about where are we in the cycle? Where is risk-taking going to land? Is it a hard landing? Is it a no landing situation? And I think really what fixed income offers is sort of a look-through to get to the other side without being very decisive about what that landing zone is.
All right, that was Jerome Schneider over at PIMCO, who helped us kick us off to the close here on this Wednesday afternoon. Pleased to say, taking us to those closing bells is Nancy Tangler, CEO and CIO over at Laffer Tangler Investments. All right, Nancy, you don't strike me as somebody who's piling into fixed income, so maybe I'll avoid that. But there is a link here, and there's always a correlation, we should say. And I am curious, from an equity perspective, an equity investing perspective here, our rate levels right now and their general perceptions that they're going to stay where they are right now, is that having any meaningful impact right now on investor sentiment?
Well, so to Alex's point, I think the reason that technology acts defensively is because they've been huge beneficiaries of higher interest rates. So if you just look at Meta, Apple, Microsoft, Amazon, and Google, they hold 23% of corporate cash, and it's growing. I think Meta's grew threefold this last year. That is interest income, and Google was up 78%. So now we're seeing dividends, but they are more defensive and less interest rate sensitive in a negative way than people do think. That said, I think that the yield curve has been distorted by the Fed and the Treasury with all the issuance at the short end, which has propped up rates. So we've been putting our clients, simple as it sounds, in just rolling really short ladders of treasuries and renewing them as they mature, and it's been a great strategy.
Do you have any sense here that that strategy is going to continue through the rest of the year? I mean, basically what I'm asking is, do you think the Fed is pretty much done, that they're going to stay where they are for the foreseeable future, and that strategy can be executed, I guess, without the Fed messing it up?
I think so, Romain. I mean, I'm of the mind that we'll probably get a cut, and there's a whole bunch of reasons for that. But generally, that's not going to matter much to the short end, and it's not going to matter much to stocks either. But as I've talked about on your show, really for almost the last year, this market and this economy is analogous to the 1990s in so many ways. It's anomalous in how much debt and spending we have as a country, but there are a number of analogies that line up. And I think what will save the day at the end of all of this is productivity, and that will bail us all out, but in particular the Fed.
I mean, funny, we were talking about fashion. Same deal, right? The 90s are back in terms of fashion, so it's a nice little pair. So if that's the case, what is your portfolio that would have that crushed it in the 90s that you can then somewhat replicate today?
Yeah, well, so I think you have to. Our investing theme has been and will continue to be, I think, for the next 3 to 5 years, old economy companies that are embracing digitization, cloud computing, generative AI, and then the suppliers of those picks and shovels. So not just the hardware, but the software applications, and it's a really interesting collection of names. The poster child for old economy is Walmart. They sort of check all the boxes. They've also embraced robotics, and that's improved margins, improved growth, same store sales comps have grown up dramatically. But most importantly, they raised the dividend 9%, which is a vote of confidence from management that the earnings power they have generated will continue. So there's a number of those names in industrials and other retailers that we own with that theme, and then we're overweight technology and many of the usual suspects that you might guess.
Where in industrials do you like, and how do you deal with an industrial company that is in the middle of a structural trend but is still a cyclical industry?
Well, so you own companies like Quanta, so PWR, that's rebuilding the grid and has been able to generate really significant growth. Carrier, who's cooling all the data centers that are going up. Even in REITs, you can play the theme through Equinix or DLR, and PLD, which Prologis, which is logistics. So we've really tried to keep it consistent. It's worked really well for us from a performance standpoint. But there's other places too besides retailers. Financials. I mean, American Express is using generative AI to increase effectiveness in fraud alert, increase the effectiveness by 6%. And they've just gotten started. So we think there's going to be a lot of applications people aren't thinking about, and it is going to go to the bottom line and make companies more productive.
How much visibility, though, do you have with that? I think we all agree that this is something big and it is going to be transformative, but picking and choosing who the real beneficiaries are can't be easy right now, Nancy.
No, it's not easy at all, which is why when you said you were old, I feel much older. It's hard work, and you get some of them wrong, and we certainly do get them wrong. But the real focus has to be on the companies that can generate sustainable long-term earnings growth. I know it sounds obvious, but then you filter through all the noise that we get from the Fed and the short-term moves in economic numbers, and you step in and buy those names. So we were adding to a number of names, CrowdStrike, Google, ServiceNow on sell-offs, and we will continue to do that. Amazon was our stock of the decade, and we continue to add to that on weakness because we think they're going to continue to be the winners. And we also like Oracle, which is kind of an old economy technology company that has really benefited along with Broadcom. Who would have thought? Sort of the poor man's AI name.
Absolutely. Oracle making a comeback. Hey, and Nancy, if Dell can make a comeback, then why not Oracle? Right. All right. And by the way, we're both still young. Nancy Tengler, CEO and CIO over at Laffer Tengler Investments, helping us count you down to those closing bells. Just about 3 minutes away from those bells. Stocks still on the back foot here on the day. In fact, now hitting fresh session lows with the S&P down about 0.8%, the NASDAQ down 0.7%. But the big decliners today are in that industrial and cyclical space. Dow Transports, Dow Industrials, S&P 400 mid-caps, and the Russell 2000 each down more than 1% on the day.
Yeah, also Visa's not having a very good day. Chevron's not having a very good day. It is a little bit broad-based, interestingly enough.
And you're still seeing that sell-off continue in the Treasury market with yields moving higher. Some, I guess, somewhat elevated volatility. The VIX actually now back around 14, which normally wouldn't be cause for any concern. But given that it's kind of been at like 2 for the last 10 years, maybe you get a little bit concerned. We're going to have a full breakdown coming up in just a second of all the big market moving action here on the day. Don't go anywhere. We're about to take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with, well, Carol Massar and Tim Stenovic. They're back.
You say that unsure.
I have to wait till you guys pop up on the screen. I never know when Carol's taking the day off, but we welcome our audiences across all of our Bloomberg platforms who join us 5 days a week, Carol Massar, on radio, television, and even, yes, Carol, on YouTube.
4 days a week this week.
And
quick correction.
That's
quick correction.
Gosh. Okay.
I'm sorry.
Mr. Correction over here.
Yeah.
Hey, listen, airlines, a bit of a bummer today, down more than 2%. You guys know the story. American Airlines slashing their profit and revenue expectations. I love it. The CEO kind of saying we misjudged demand, which is kind of interesting because they just gave out projections about a month ago. So interesting, but nonetheless, American Airlines a big hit, and the group overall, Tim, down about 2% today.
Yeah, but there are some airlines that are actually doing okay. We got SkyWest higher. We got United lifted to a buy at Jefferies, so United is higher by 2.4%. So a couple airlines bucking the trend here, Alex.
Yeah, we actually talked to Jefferies analyst Sheila Kaioglu earlier, and she was basically saying, look, They added too much capacity in the low-end market on the domestic side, where you had like the Frontiers and the Southwest competing, and that was a big issue, and that was a big strategy fumble by American. Now, if it's a macro read, though, then that's where I think the filter becomes more interesting. Is there a macro read here? Like, are we still going to Europe, just not in the U.S., or are we just not going to travel at all anymore because Taylor Swift is almost done with her tour? Big question.
Well, we talked about a record travel season, though, too, this summer.
Yeah,
right?
Well, I don't know. Apparently not for American Airlines. All right, we are expecting some earnings after the bell, including from Capri, as well as American Eagle and Salesforce, HPQ, AI, Okta, and a few others as we get the closing bells here in New York with an S&P 500 back below 5,300, a drop today of more than 30 points, almost 40 points on the day, down 0.7%. The NASDAQ composite lower on the day by about 99 points or 0.6%. And the Dow Jones Industrial Average, a 400-point drop here on the day, 1% lower than where it was a day ago. And the Russell 2000 also moving lower, a huge drop there. In fact, that is your primary